A minute to go until the start of cash equity trading. I'm Francie Lacqua here in London. And here are your top stories. Liftoff. Jay Powell ramps up the fight against inflation. The Fed launches what's said to be its most aggressive tightening cycle in decades. The Bank of England is next. Traders brace for the third straight hike. The specter of stagflation looms large. And Joe Biden calls Vladimir Putin a war criminal. The U.S. pledges armed drones for Ukraine. Zelensky addresses Germany lawmakers. Now, this is a look at the futures. We had a bit of support coming in from China, giving a nice lift off to some of these European stocks. Now, it's not what we saw yesterday, but you can see gaining some 0.3% for the Euro Stoxx 50. DAX futures also gaining by a similar amount, as is the FTSE, gaining some 0.3%. Of course, this could change as we hear from the Bank of England. Also, a number of things that we need to watch out for, which is the inverted yield curve in the U.S. and actually the impact as markets digest what they heard from Jay Powell, what it means for their portfolio strategy. Now, the Fed did raise, as expected, rates by a 0.25 percentage point. It did signal hikes as expected by the markets for 6 remaining meetings in 2022. The chair, Jay Powell, there saying that the U.S. economy is very strong and can handle monetary tightening, but there was also a feeling that he will hike even if it puts growth in jeopardy a little bit, which is why we're seeing, we saw yesterday a bit of a wobble when it comes to some of the markets. For example, one commentator, this is one of my favorite quotes, Jay Powell has declared open season on the U.S. yield curve, and if you look at what stocks and bonds did, which is reverse or worse of their post-Federal Reserve statement weakness, it was very clear that the clearest move was seen in the yield curve, which promptly flattened. All right, equity indices now open. You can see the FTSE getting some 0.4%. Similar gains for the CAC 40. Commodities, always keep an eye on commodities because of the shortage globally, or certainly the implications that this war in Ukraine could last a little bit longer, although we talked about neutrality yesterday. Diplomatic talks still ongoing. Brent crude getting some 3.5%. Some of the sovereign bonds, you can see Swissy, when it comes to foreign exchange, and also the Swiss 2-year could be an interesting play, minus 0.355. And then I'm also looking overall at some of the other things that we're watching, which is Euro 110.44. It's just in a couple of minutes that we should be hearing from President Zelensky of Ukraine, speaking to the Bundestag, and Christine Lagarde also talking shortly, because there is the conference of the ECB watchers that's starting. So S&P futures getting 0.1%. If you look at the gain that we saw in technology, for example, in the Hang Seng, yesterday gaining more than 15%, still gaining 7.3%. Of course, we watch for the Bank of England. Now, by raising rates by 25 basis points, the Fed kicked off a series of aggressive interest rate hikes. The chair told reporters that inflation is too high, the labor market is overheated, and price stability is a precondition for the central bank as it tackles the hottest price pressures in 30 years.
It's clearly time to raise interest rates and begin the balance sheet shrinkage. And I just wanted to say that as I looked around the table at today's meeting, I saw a committee that's acutely aware of the need to return the economy to price stability and determined to use our tools to do exactly that.
Well, to talk about the markets, we're joined by Ben Guttridge, Invesco's Director of Model Portfolio Services. Ben, what did you make of Jay Powell's announcement? 25 basis points as expected, but actually he sounded pretty hawkish.
Yeah, well, I mean, I think he probably got it about right. There's a lot of variable, sort of conflicting forces. I think, front and center, there must be a lot of political pressure given the headline inflationary pressures that consumers are dealing with. So to not showcase their keenness or willingness to tackle that, I think, would have represented presented a real problem. Yeah, I think their willingness to deliver sort of single hikes per meeting, I think, is striking the right balance.
Ben, do you worry that actually this leads to a recession or a severe cutting of growth? I mean, this is not the good kind of inflation that comes with a recovery. Partly it's a recovery, but partly it's also supply and demand when it comes to some of the gas, some of the raw materials really going up quite significantly.
Yeah, I mean, absolutely, you're right. There is much of this inflationary pressure is supply-driven rather than demand-driven, but the labour market is strong, wage pressures are present, and the inflationary pressures that were supply-driven can turn to demand ones, and this could be, you know, something of a self-fulfilling sort of cycle, if you like. So I think, you know, the Federal Reserve are right to address this situation, and I think they could have gone, well, no, I'm glad they didn't, but they could have gone harder, and then you would have really have seen much more yield curve inversionary sort of threats. But no, I think they got the balance about right.
When you look at some of the inverted yield curve or curves flattening, Ben, how much more can it go?
Well, I mean, you know, the yield curve can invert. You know, the Federal Reserve may have made an error. It's my sort of prognosis that they haven't made an error at this stage. But I think what's more likely to deliver an inversion is sort of more sustained and more troubling inflationary pressure to the upside, where the Federal Reserve then decide that they have to do, you know, something like a 50 basis point hike at a meeting. And that hawkish pivot could very quickly turn into, as I say, could fade into a more dovish then follow-up as the yield curve inverts. So, I mean, those pressures are there. It's a very sort of uncertain environment. The inflationary pressures, as driven by commodities, you know, are front and centre, and they're very difficult to forecast. But at the moment, as I said, the balance of inflationary pressures versus the tightness of the labour market, you know, does require addressing, and therefore sort of a single hike per meeting looks to be okay for the time being. And if the yield curve inverts, I think the financial conditions will require the Federal Reserve to slow.
Ben, we of course follow what the president of Ukraine is saying. Yesterday, he did a very incredible, impassionate, emboldened address to the U.S. Congress. Today, he's speaking to German lawmakers at the Bundestag. He's once again getting standing ovation, much like we saw in the U.S. Now, we'll see if the messaging is very different. Of course, yesterday we also had Joe Biden spending, you know, increasing some of the help and the support that he's giving to Ukraine. When you look at the, you know, 5-10 inverted yield, which was the first time since it briefly did so in March 2020. Ben, what does it mean for your active portfolio strategy? Like, how do you want to be invested, given all of the uncertainty, the geopolitical uncertainty, and the fact that maybe, you know, markets are discounting something worse happening between Russia and Ukraine?
Well, I think it's something of a cottage industry, choosing which parts of the yield curve, you know, should dictate how you position your portfolio. I mean, at the moment, you know, sort of the 210 not inverted, but there's sort of increasing pressure there. But, you know, I think we can be comfortable in terms of investment strategy being overweight equity on the basis the economic tailwinds of, you know, a strong labour force, strong household balance sheets, you know, can continue to support demand. And in time, you know, we may see something of an unpleasant but ultimately conclusion to this resolution in the Ukraine that allows energy markets to, you know, become a little less troubled, and therefore equity markets can perform. But, you know, making bold decisions beneath that is a struggle at the moment. I think if we get that soft landing, then and the economy can deal with these interest rate hikes, then financial assets look, you know, the financial sector looks like it could perform. And as I said, that's sort of where you're leaning to. But you don't want to get too aggressive on that because, you know, we could be on the cusp of a policy mistake. I recognise the core view is vulnerable, and in that environment, you know, longer duration assets would perform, and those more cyclical assets could struggle. So sticking with equities, but just a modest balance bias towards sort of cyclical assets at the moment.
Ben, I also want to bring in China because, Chinese stocks yesterday seemed to be possibly at a turning point. Do you also take advantage of the differential between China and the Fed? Or is China, I know from a market's point of view, it's very attractive, but because it's still on the fence or we don't quite understand what their take with Russia is, does it make it more difficult for an investor to be fully invested in China?
Yeah, I mean, you're right. The geopolitics of the Russian relationship is one that will weigh on sentiment towards that asset class. But of course, what we've been really concerned about in 2021 were the regulatory pressures upon the more private sector, certainly internet-type businesses, and the absence of stimulus to address domestic conditions, particularly in the property market. It looks to be moving on both of those, and of course, by the time should they go a bit harder on that, and certainly in relation to stimulus, the market would have already appreciated in the face of it. But there's building evidence that Chinese policy is going to work for the better for emerging markets and for Chinese equities. But we have to wait and see on that story because delivering lots of stimulus into the economy isn't going to address that wealth inequality challenges that they're so keen to tackle. So at the moment, I think, looking, but yet get as positive on EM as DM.
Okay, Ben, thank you so much. Ben Guttridge, there, Invesco's Director of Model Portfolio Services, stays with us. We'll talk a little bit about the Bank of England. And I want to get back to this idea that Ben was just talking about between this clear divergent path between the Fed and China, especially if you look at the 5-yield differentials. In the meantime, we also are waiting President Zelensky of Ukraine to talk to the Bundestag in Germany. You're looking at live pictures. Ukrainian negotiators now, again demanded a ceasefire and a withdrawal of Russian troops in video negotiations on Wednesday. And then we're expecting, of course, Mr. Zelensky to ask for more aid. He may ask once again for a no-fly zone. We'll see exactly what comes from that when he starts speaking in just a couple of moments. Coming up, it's decision day at the Bank of England. Will they hike for a third time in a row? We're on Threadneedle Street next. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open, everyone. We're 12 minutes into the European trading day, and you can see we're seeing a bit of support for the European stock 600, gaining some 0.4%. The DAX, the CAC 40, and the FTSE also gaining by a similar amount. Actually, the DAX, probably because of its proximity and its dependence on Russian energy, is unchanged at the moment. European stocks gaining, actually, if you look at a longer term, it's nearly wiping out losses that followed Russia's invasion of Ukraine. I mean, this is something that we need to pause and think whether this is the right thing for traders to do, but they seem to be encouraged by the Fed's comments about the strength of the economy. Now, we're just hearing Mr. Zelensky over at the Bundestag. You're looking at live pictures from the Bundestag where the Ukrainian president is addressing lawmakers. He just got a standing ovation moments ago. Of course, we'll keep a very close eye on what he's saying. Let's listen in.
Посеред Європи між свободою і неволею. І стіна ця міцніша з кожною бомбою, яка падає на нашу землю, на Україну. З кожним рішенням, яке не приймається заради миру, не приймається, хоча може допомогти.
The president of Ukraine, Mr. Zelensky, addressing Bundestag lawmakers. Also, a piece of breaking news from the London Metal Exchange saying it will delay the electronic nickel market opening to 8:45 a.m. Now, we had spoken to traders earlier on, saying that they were telling us that the LME system was actually rejecting orders during pre-open at the 8% limit down. So, for the moment, what we understand, but again, it's a developing story, the LME delaying the electronic nickel market opening to 8:45 a.m. UK time. Now, it's also Bank of England decision day with a UK rate announcement at 12 p.m. today. A clear majority of economists are expecting a third rate rise in a row. Now, for more, we're joined by Bloomberg UK economy reporter Lizzie Burden, who's outside the Bank of England. Lizzie, Fed, of course, raising rates for the first time since the pandemic yesterday, signaling 6 hikes this year. Does that put pressure on the BOE to do more?
Well, it's a tricky moment for the Bank of England because while you've got inflation running at a 30-year high in the UK and only set to rise as the war in Ukraine drives up food and energy prices, at the same time, the risk of the Bank of England responding by tightening policy too aggressively is that it adds to the weight of war on the recovery. So, as you say, traders are expecting the third straight back-to-back rate rise from the Bank of England today. The question is, how big will it be? There may be some on the Monetary Policy Committee who want to front-load hikes, go for 50 basis points today to get on top of inflation expectations now. But there may be others who say that inflation is going to tame itself by weighing on demand, and there's not much that a rate rise can do about the immediate crisis. Bloomberg Economics reckons we'll land in the middle at 25 basis points, which would take the key rate back to 0.75%, which is where we started before the pandemic.
So, Lizzie, are we likely to get any more details on QT, quantitative tightening, today?
Well, the closer we get to the 1% mark, that's the level, the minimum the bank has said it will start active sales of government bonds, but it's not an automatic trigger. And what I'm hearing is that the bank is going to tread carefully because this is new territory for the bank, and it's also said it's not going to do active sales in a time of economic or financial stress. And clearly, war in Ukraine creates both.
Lizzie, thanks so much. Lizzie Burden there, of course, on the Bank of England. I have to say, if you look at the war in Ukraine, it definitely provided another upward jolt in energy prices. Some economists think a minority of the BOE's 9-member policy panel will probably continue their push for an unprecedented 50 basis points increase. So let's bring in Ben Guttridge, Invesco Director of Model Portfolio Services. Ben, is there anything that the Bank of England, but also the Fed, but the Bank of England today can do to try and ward off the specter of stagflation?
Well, I mean, it can address stagflation by working extremely hard to try and kill inflation by being very aggressive on interest rate hikes. I mean, that would end stagflation, but that wouldn't solve the stag part. That would be really sort of counterproductive to growth. So I think, you know, it's the sort of the tightrope, isn't it, to attempt to cool some of the heat in labour markets and address the idea that wages are going to trying to keep up or move closer to prevailing levels of inflation. You know, they do need to move on interest rates, but, you know, moving aggressively, doing that double hike or the 50 basis point hike would be, you know, a significant squeeze on consumer incomes and a pretty worrying signal, I think, for those who would feel that pinch the most. So, a difficult balancing act, but a single basis point hike sort of seems the appropriate strategy.
I mean, Ben, the Chancellor of the Exchequer, Rishi Sunak, will also unveil his spring statement next week. What are you expecting there? What would be the ideal policy mix right now?
Well, I mean, the ideal policy mix would be one that retains some generosity. Obviously, you're thinking about what's going to happen in relation to energy strategy, things that in terms of long-term sort of sustainability of self-sufficiency in terms of energy strategy and dependence away from other, less reputable sources, but also how the lower income portions of society are going to deal with this the squeeze on incomes. So, generosity on both those fronts, I think, is called for. And, I think Rishi has shown his, despite his sort of conservative ideology, I think at times of acute pressure, I think he's shown he can be generous, or that the policy mix can be generous in that regard.
Ben, thank you so much. Ben Guttridge there, Invesco Director of Mono Portfolio Services. He stays with us. Now, in the meantime, we're also looking at President Zelensky of Ukraine talking at the Bundestag. You're looking at live pictures. He just said Russia is using Germany and others to finance the war. He says the new wall is being raised in Europe with Ukraine. Of course, he'll continue, we understand, pushing those lawmakers to have more support for his country. What he has done is pretty extraordinary in terms of getting people aligned across the world to try and support Ukraine. We'll have plenty more on that. We'll have plenty more on markets as well. This is Bloomberg. Welcome back to the Open, everyone. We are 22 minutes into the European trading day. Stocks supported with the European stock 600 gaining 0.5%, nearly wiping out losses. Actually, that followed Russia's invasion of Ukraine. Traders pretty much encouraged from what they heard the Fed say yesterday. Now, let's also check in on some of the market movers with our Danny Berger. Danny, what do you have?
Well, Francine, we're still looking at companies abandoning targets, having to revamp things because of the fallout from the war in Ukraine. ThyssenKrupp being one of them, the industrial giant in Germany, saying that they, for now, are uncertain about the spinoff of their steel business because of the economic impact of the war. That, of course, has hit raw materials. That means issues for ThyssenKrupp's steel business as well as their automotive supply business. So it's not just the suspension of this spinoff, but it also is a suspension of their full-year guidance when it comes to free cash flow before M&A. So shares dropping as much as 6%. Uniper, this is also Russia-related. They are a big energy company listed in Germany. The German government possibly looking at building a hydrogen pipeline from Norway. This is to reduce dependence on Europe on Russian gas. Uniper would benefit from any increased infrastructure spending, so those shares up 1.5%. Finally, Deliveroo, a little bit of earnings news here. Shares are up 4%. Jefferies calling their fourth quarter earnings a little bit on the weak side. However, they are targeting to break even at the back end of 2023 or the beginning of 2024. So finally getting to profitability. Jefferies says that those estimates look good and should cause some brokers to lift their targets on Deliveroo, Francine.
Danny, thanks so much. Danny Berger there with some of the biggest movers in today's trading session. Now, we're also looking at live pictures from the German Bundestag, where the Ukrainian president, Volodymyr Zelensky, is addressing lawmakers. He says Russia is using Germany and others to finance the war. Yesterday, we saw a pretty impassioned speech by the Ukrainian leader to help, of course, his cause to U.S. Congress. Now, joining us is Bloomberg's Aggie Cantrell at the Poland-Ukraine border. So, Aggie, how's the conflict progressed over the last 24 hours?
Hi, Francine. So yes, he in his speech just now, Zelensky alluded to this humanitarian crisis in Mariupol, especially talking about the bombardment last night of the theater as well in that city, in that besieged port city in South Ukraine. It was also a moment for Zelensky to call on German businesses to criticize the what he says is the continued financing of Russia from German businesses. He also alluded to a new wall in Europe. It's the sort of this tactic that he has spoken when he has spoken to the UK, when he spoke about D-Day, when speaking to the UK Parliament, and also yesterday when speaking to the US Congress, when he alluded to 9/11 in Pearl Harbor. When speaking to the Bundestag today, he alluded to the Berlin Wall, saying that this was a new wall in Europe, and that projects such as Nord Stream 2 was the cement for building that wall.
Aggie, Germany, of course, in focus today. We have NATO's Jens Stoltenberg meeting Olaf Scholz and Mr. Zelensky just having finished his address to the Bundestag. So what are we expecting from there? This is all about energy security and the fact that there's pressure from Ukraine to cut off those ties with Russia.
Yes, so that pressure was really felt this morning with Zelensky's speech, but also this afternoon with Stoltenberg. We're interested to see what that means in terms of Germany's defense spending. Germany has been a country that for a very long time has been reticent to really push up their defense spending, to bolster their army through a historical context of being reticent to have a large army ever since the Second World War. But this seems like it's been somewhat of a wake-up call within the Bundestag, and now Scholz has announced a new fund for investment in the army and a commitment to that 2% target for NATO.
Aggie, thank you so much. We'll have a full roundup, of course, of the situation in Ukraine. Also, we'll look at markets after the Fed's first post-pandemic rate hike. We look at the implications for the U.S. and beyond. We also look at the yield curve. This is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Liftoff. Jay Powell ramps up the fight against inflation. The Fed launches what's said to be its most aggressive tightening cycle in decades. The Bank of England is next. Traders brace for the third straight hike. The specter of stagflation looms large. Joe Biden calls Vladimir Putin a war criminal. The U.S. pledges armed drones for Ukraine. Mr. Zelensky is currently addressing German lawmakers. Now, let's also take a look at which sectors are on the move the most. Now, if you look at what exactly is going on across the board, we're seeing a nice liftoff. Well, nice. We're seeing a liftoff in European stocks. That's driven by travel and leisure, real estate, technology. So traders still uncertain what it means for inflation, but they seem to be taking in their stride what they heard from the Fed. The Fed raising rates by a 0.25 percentage point, also signaling hikes at all or the next 6 remaining meetings in 2022. Mr. Powell saying the U.S. economy is very strong and can handle monetary policy tightening. Now, let's also have a look at what exactly is going on in the bond market. I have to say, one of my favorite quotes today is Jay Powell saying, or someone saying, that he declared open season on the U.S. yield curve, stocks and bonds reversing some of their post-Federal Reserve statement weakness. It's very clear that the spread, especially between the 5- and 30-year treasuries, now down the flattest since 2008, and that flatness is also accelerating. So with the curve a gauge of the market sense of the economy, the flattening is in part down to bets on policy errors from the Fed. So by raising rates by 25 basis points, the Fed kicked off a series of aggressive interest rate hikes. Chair Jay Powell told reporters that inflation is too high, the labor market is overheated, and price stability is a precondition for the central bank as it tackles the hottest price pressures in 30 years.
It's clearly time to raise interest rates and begin the balance sheet shrinkage. And I just wanted to say that as I looked around the table at today's meeting, I saw a committee that's acutely aware of the need to return the economy to price stability and determined to use our tools to do exactly that.
I think that the Fed has largely abandoned monetary orthodoxy. It's trying to be too cute in how it's managing this.
It's fanciful to think that you can do that without rate hikes bleeding into unemployment. I think we're going to have to see higher unemployment.
They're willing to roll the dice and risk a recession in the name of bringing down inflation. I think it's a big change.
It's one of those get-going moments. There's not need to panic about inflation. Let's be clear here. Long-term inflation expectations are still pretty well anchored.
Well, we're now joined by Larry Hathaway, co-founder of Jackson Hole Economics, to talk about the Fed moves, and of course the flattening yield curve. Larry, thank you so much. It's so nice also to see you in London and in person. It's been way too long. When you look at, the flattening yield curve, does it point to a policy mistake from the Fed?
I think it does. I'm both mystified and slightly distressed by the Fed's moves. Mystified because they seem to ascribe this to monetary policy when I don't think inflation is really down to that, and distressed because I do think they are on the path towards a policy error, which again, the bond market is telling us is also the case.
But a policy mistake, why and what does it lead to?
Well, I think that they have misunderstood that the source of inflation is a temporary demand shock, basically fiscal policy, and one thinks probably a temporary supply shock owing to the pandemic and the rigidities there. It's not really about monetary policy, and if they aggressively tighten, then they're probably going to be tightening in the face of a tightening of fiscal policy as well, which is likely to lead to an overshooting on the downside for growth.
Temporary could be 12 months, could it be 14 months?
I think by the middle of this year, we're going to see that inflation will have peaked, will be coming down, and I think we're going to see also that growth will be moving back towards trend, if not below trend already by that time.
So what happens next? Do you think they'll have to cut rates? I mean, so what I'm trying to understand is that if they're aggressive now and they try and stave off and basically throw everything to avoid stagflation, will we be in a better shape than if they didn't do it?
So first of all, I think that by the middle of this year, they'll probably have to back off from the kind of statements they made yesterday, that they won't follow through with up to 9 rate hikes. Will they have to cut rates? I'm not sure about that. A lot depends on some factors that we just can't forecast. For example, the evolution of the war. But it does seem to me that the Fed is likely to pivot, just as it did last year and around its transitory statements, and that we're going to find a Fed that's flip-flopping in part because it's misdiagnosed inflation in the U.S. economy.
Because they can't measure it right, or because they're forecasts, or they're afraid of stagflation?
I think that their monetary policy or central banks everywhere have had difficulty in understanding the inflation dynamics. This is not down to easy monetary policy. Something changed in the last 2 years, and that was really about other factors in the economy. And when the Fed made its comments about transitory inflation last year, they were probably right. They somehow threw in the towel, and I think now they're going to find themselves flip-flopping again later this year.
Yes, but flip-flopping that will lead to markets stopping believing? Like, are there second-round effects of the Fed getting this wrong?
Well, I don't think the Fed is doing its credibility a great deal of favors at the moment. So far, that's not terribly evident in market pricing. And so long as the Fed remains flexible and can admit essentially a policy error and then course correct, they'll be fine in the longer run.
So what does that mean for the Bank of England? Or are we looking at a possibly, I mean, is there a group think that because inflation is at a 40-year high across many countries, we could look at a world, central bank policy here?
We could be, and that is part of the problem that we're seeing concerted tightening from so many central banks. On the other side of the equation is, of course, China, which is signaling that it's prepared to ease. But from the Bank of England's point of view, they're in lockstep with the Fed at the moment. They'll hike today, most probably by a quarter point, and they are in the mode to hike a series of times this year.
So what does this divergence, what does it mean for investors if you play this divergence between PBOC and Fed?
Well, I think for investors, the challenges are that we're seeing slowing growth and especially slowing earnings growth in the United States. We've got to find opportunity elsewhere. And it seems to me that where there's visibility in the long run is the place to be. Industrials around the energy story in Europe is clearly one of those. And I think China's stimulus is another one. So it's time to look as investors a little bit beyond the United States and look at other opportunities.
Okay, Larry, we also have this, this breaking news headline. Russia says Eurobond coupon payment has been made to the correspondent bank. I mean, if this is true, and we have to look exactly in what currency it's being paid, because if it's ruble, we heard it also from rating agencies, this, is a default. Do you worry about, Russia defaulting and us realizing that big banks held some of this stuff, like the second and third round effects of it?
Well, we've already seen some admissions about where holdings were and the write-downs associated with this, mostly in the asset management group that's been holding those instruments. So I don't think the default itself is going to be a 98-style event. This is really a different world we're in today.
All right, Larry stays with us. Larry Hathaway, co-founder of Jackson Hole Economics. We'll talk a lot more about Russia. Just that breaking news moments ago, Russia saying that Eurobond coupon payment has been made to the correspondent bank. First of all, I know a lot of traders, and I was speaking to our reporter almost on a daily basis, says traders will be happy that they haven't defaulted when they see the money. Show me the money. So we'll discuss plenty more on Russia shortly. This is Bloomberg.
you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open, everyone. 40 minutes into European trading day, and you can see European stocks gaining some 0.4%. We're seeing similar gains for the CAC 40 and the FTSE gaining 0.3%. If you actually look at what stocks have been doing since the start of the war in Ukraine, they seem to now be recouping most of their losses as traders try to digest the Federal Reserve's view that a robust U.S. economy can weather the campaign against high inflation now underway. Now, Russia says a Eurobond payment has been made to a correspondent bank. This as the deadline for coupon payments on Russia's dollar bonds drew to a close on Wednesday. Now, for more, we're joined by Bloomberg's Irene Garcia Perez, who's been out front on all of these stories, including some of the corporate bonds. So, Irene, bondholders haven't received their money yet, but it could be coming. So what are you looking for?
We're looking basically for receivement of payment because payment has been executed, the Russian authority says, but for it to count as payment, it has to be received.
So, Irene, we've also started to see new Russian companies that are facing difficulties to make the transfers to pay interest. What's the latest on that?
So we have Eurochem, a fertilizer maker that had a coupon payment on Monday, and apparently that payment was blocked by the paying agent. And then we had Severstal, a steel maker, that had a payment due yesterday, and the company said that there might be issues with the paying agent, which in both cases was Citibank.
All right, Irene, thanks so much. Irene Garcia Perez joining us on the latest possibility of a default. Now let's get back to Larry Hathaway, co-founder of Jackson Hole Economics. Larry, I mean, you were saying that even if there is a default, this is not like 98. Why?
Largely because the leverage isn't there, right? The unwinding of leverage was really what was the big problem in 98, and there isn't really that kind of positioning in the marketplace these days, not within Russia, not generally across the EM universe. So.
Yeah, but I would have thought, I mean, the Russian economy is bigger and everything's, though, more intertwined. So is it the lessons from 08 that actually led to some of the separation, or...?
Well, the intertwined nature of it is clearly there, but it's not as though we have sort of a long-term capital management situation there, i.e. that kind of story of borrowing aggressively to play spreads. Yeah. It just hasn't been part of the backdrop of capital markets in recent years. There will be write-downs, and there have been some already, but their holdings are also fairly diffuse. So it's not as though we have concentrated holdings either. So the asset management industry has sort of spread that risk, and that makes it probably more manageable than it was then.
Larry, this is also financial war, right? With the sanctions and energy war. Longer term, does it really take out the U.S. dollar as the reserve currency?
Well, I think there are 2 points to be made there. The first is that we're seeing the power of banks, and banks in the end may prove to be more effective than tanks in this sense. It is about economic warfare. I think that's absolutely correct. With respect to sort of the dollar's role in this, the reality is it's very, very difficult to replace the reserve currency.
Yeah.
China is not in a position to do so because it takes two preconditions. Number one, open your capital account, which China is reluctant to do. And second, you have to supply the world with the reserve currency, meaning you have to run trade deficits, another bugaboo for China. It is also pretty clear that Bitcoin and the blockchain is simply not fit for purpose yet. It is not replacing the international payments currency, which is the dollar. So I don't think there's a viable alternative at the moment. I don't think the dollar is going to be, in the end, that much damaged by this use of it as a weapon in this particular war.
But Larry, does it work? So if you freeze out Russia, but actually a lot of people also inside Russia don't necessarily know that there's a war, don't really understand what the war's about. You know, the West and other countries are basically trying to pressure Putin from the inside. What if, I mean, you know, how long will that take, and what if this doesn't work?
Well, it has to be seen, I think, in the context of something broader. It is, of course, as you're saying, a tool to try to exert pressure to get them to reconsider the calculus of the war that they've embarked on. But you also need to have off-ramps. You need an exit policy, and you need a viable, let's say, alternative for Putin then to conducting the war in the way in which he is. Yeah. That goes beyond economic, let's say, measures. It is in the realm of diplomacy, and surely that has to be complementary to what's being done with the financial picture.
Larry, thanks so much. Larry Hathaway, there, co-founder of Jackson Hole Economics. Nickel has reopened this morning. The London nickel market actually faced fresh turmoil before trading even began, as brokers trying to sell at the 8% daily limit had their orders cancelled. Now, that prompted the London Metal Exchange to delay the opening of electronic trading to today. Still down 8%. Unclear whether it's open or it was open very briefly, but we have been hitting the phones. We spoke to multiple brokers saying that orders to sell were being rejected ahead of that 8 a.m. opening. Things could be stabilizing. You can see nickel in London, we understand, is reopening, but I do want to double check, down 8%. Now, let's get more on the war in Ukraine. The country's president, Volodymyr Zelensky, has told German lawmakers that Russia is building a wall through Europe with the attack on Ukraine and appealed for more support from Berlin. Well, joining us now is Bloomberg's Aggie Cantrell. So, Aggie, we were talking before about the fact that Germany was really in focus today. What is Ukraine and what's its president Zelensky asking of Germany?
The main thing that Zelensky is looking at Germany for is a commitment to further sanctions against Russia, especially when it comes to those that could also impact the German economy. It's worth remembering that 55% of Germany's gas comes from Russia, and this was part of Zelensky's speech as well. He saw that this new wall that you alluded to, he said that projects like the Nord Stream 2, which is planning to funnel a lot of gas into Germany, but has now been put on hold. That gas is essentially cement for this wall, and he's looking at Germany to commit to a financial hit themselves, essentially, in order to support the sanctions for Ukraine.
Aggie, neutrality is seen really as a key word here on the diplomatic path, but it seems that both sides have a very different meaning. So what would it entail?
Yes, there's a bit of a complexity around the concept of neutrality as it would be seen, because while Zelensky has said that he acknowledges that potentially the Ukrainian people need to accept that maybe a path towards becoming a member of NATO is not really an option for them in the short term, at the same time, he would also expect security guarantees from the surrounding nations, from NATO, from Turkey, and also from Russia. And Russia's positions that they are looking to demilitarize the country completely is something that would be seen as a massive risk to Ukraine, obviously, at this point.
Thank you so much, our Aggie Cantrell there at the border of Poland and Ukraine. Now let's get straight to the Bloomberg First Word News with Angel Feliciano. Hi, Angel.
dozens more people injured. A bullet train also derailed on a stretch of track in the region, though no injuries were reported. The affected area was devastated by an earthquake and tsunami in 2011 that left 16,000 people dead. British Iranian charity worker Nazanin Zaghari Radcliffe is back in the UK after being freed from almost 6 years of Iranian detention. The release, along with the second British Iranian national, comes after years of negotiation between London and Tehran, with the UK paying a decades-old debt of almost £400 million owed to Iran for undelivered tanks. And the U.S. accounting watchdog is insisting that Beijing provide complete access to audits of Chinese companies that trade in New York, setting a high bar for deals allowing Chinese firms to maintain American listings. It follows Beijing's wide-ranging promise to stabilize financial markets after a months-long sell-off over regulatory and debt fears. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Angel Feliciano, here in London with me. Now, the Russian Foreign Minister, Sergei Lavrov, is holding a meeting with the United Arab Emirates counterpart. He's Sheikh Abdullah bin Zayed Al Nahyan. This is in Moscow. I have to say the UAE so far has tried to attempt to be a third mediator, and they are quite close to Moscow, always have to put out the welcome mat to the Russian elite. So it'll be very interesting if he does more of a headway than some of the other negotiators in coming days. I'm thinking of Turkey and Israel. So we'll have plenty more on that shortly. Coming up, one of Russia's original oligarchs, Mikhail Friedman, argues that punishing billionaires like him shows a troubling misunderstanding of power in Russia. We have more on that exclusive Bloomberg Big Take with Stephanie Baker. That's coming up shortly, and this is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open, everyone. 52 minutes into the European trading day, and you can see stocks in Europe actually rising. U.S. futures also pretty much steady. Traders digesting the Federal Reserve's view that actually anything they do with hiking rates is into a robust U.S. economy that can weather the campaign to try and keep inflation under control. Now, back to Russia. Is sanctioning Russian oligarchs going to have an impact on President Putin's behavior in Ukraine? Well, Mikhail Friedman, one of Russia's original oligarchs, argues that punishing billionaires like him shows a troubling misunderstanding of power in Russia. Now, today's Bloomberg Big Take is an exclusive interview with Friedman. Joining us now is the author of that exclusive interview, Bloomberg's senior investigations writer, Stephanie Baker. Stephanie, first of all, I mean, you know, it's a great article, and I urge everyone to go and read it. I also push it out on social media. Why do you think Mr. Friedman decided to talk to you?
Well, he didn't want to talk when I first called him. It took a little back and forth to get him to agree. I think the situation deteriorated as within just a week after I first sat down with him. And I think what he wanted to tell me was that there is a fundamental misunderstanding of the way the oligarchs operate in Russia, that Putin has much more power and sway over the oligarchs than vice versa, which was the situation in the 1990s when the oligarchs first came to the fore and did have much more real sway and power. Putin has kind of turned that system on its head, creating a new crop of oligarchs who work for state companies or have state contracts. You know, today that crop, they are the state essentially, and people like him who don't engage in state business are coming at it from the outside and are really operating, you know, depending on whether or not Putin wants him to continue to operate. So he doesn't have any sway over whether or not Putin can stop the war or not.
But Stephanie, can he put pressure at all? I mean, there's a belief, I guess, that if you sanction the people closest to Putin, then somehow it emboldens them to try and stop the war, to mitigate the war.
You know, I think that the thing with sanctions are they are designed to take down the Russian economy. And I think if the sanctions are targeted at Russian business, broadly speaking, as an attempt to starve Putin's war machine, then I think that does make sense. But the idea that you take away yachts and private jets, which all feels really good to us right now because it seems like the least we could be doing given the war in Ukraine and civilians dying, the idea that by doing that they will in turn be upset and turn on Putin, I think is a misunderstanding of the way Russia operates now. And I think it was revealed by Putin's chilling speech yesterday when he accused traders of creating a fifth column in Russia backed by the West to try to destroy Russia. And I think that those comments were directed at people like Friedman who have made money in Russia and live abroad.
But Stephanie, I mean, very quickly, where's Putin's money? Could these oligarchs be holding it on behalf of him, which is what people have been saying, but we've never seen proof?
We've never seen proof. There could be oligarchs that operate on behalf of Putin and hold his money. But remember, Putin has the entire Russian state resources at his disposal as well. So, you know, perhaps he has money abroad, but he doesn't necessarily need it when he's got the entire Russian budget under his fingertips.
Stephanie, thank you so much. Our Bloomberg senior investigations writer, Stephanie Baker. This is Bloomberg.
going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The growth picture is very fragile. I think the Fed is being aided and abetted by the global situation in a way.
The Fed's hands are tied here. They do have to hike in order to tackle inflation.
The Fed has largely abandoned monetary orthodoxy.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, March 17th. Our top stories today. The Fed raises interest rates and signals there may be 6 more increases this year. Chair Jerome Powell assures Americans that the fight against inflation won't send the country into a recession. The Bank of England is set to reach another milestone today. It's expected to take interest rates back to their pre-pandemic level. And the U.S. pledges to send more weapons to Ukraine, including dive-bombing drones. In Moscow, Vladimir Putin vows to get rid of what he calls scum and traitors working secretly for the U.S. and its allies. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London. Matt Miller and Kaylee Lines, of course, with me in New York. And Kaylee, it seems from a market perspective, stocks clinging to that view expressed by Jerome Powell that the U.S. economy will be strong enough to take it in terms of interest rate hikes, even if bond markets have more reservations.
Yeah, it's interesting to see what message the bond market relative to the stock market is signaling. Is the bond market signaling that the Fed isn't actually going to be able to be as aggressive as it wants to be, and therefore that's a good thing for risk assets? Either way, we saw U.S. stocks rising after that Fed decision yesterday, but we should note that they were already positive going into it because of the risk sentiment boost we saw in Asia with China's verbal intervention on Wednesday, pledging to support financial markets and the economy, boosting stocks in that region. And that was true today as well. We are still feeling the benefit of that. The MSCI Asia Pacific Index up 3.6% after a near 4% move to the upside yesterday. And the Hang Seng China Enterprises Index, the Hang Seng Tech Index, both which saw big rallies in the Wednesday session, were each up about 7.5% overnight as well. Outside of equities, though, in foreign exchange, I did want to point out the massive outperformance of the South Korean won. Far and away the biggest gainer against the dollar among the Asian currencies, stronger by 1.7%, the best day since March 2020, right now at that 12.14 level. It's benefiting from some clarity, not as much uncertainty around the path of the Federal Reserve, Matt.
All right, very interesting currency moves, to say the least. We do have kind of an undecided look in terms of the S&P open this morning. Futures not doing a heck of a lot of anything. and investors are buying bonds, pushing the yield down, but not by much, still at 213.32. Crude is actually up again, although it's still down 8-9% for the week, so at 98.54. Texas Intermediate is still under $100, and Bitcoin is off 1%, but still at 40,831, so still holding over that 40,000 level. I would say, Anna, that there's a lot riding today on what we get out of the Ukraine war situation, what traders decide they're going to make of the Fed on the second day after, and what comes really out of China, what kind of support we really sort of expect from those markets, because a lot of these question marks are still hovering over this market.
Yeah, absolutely. We saw in yesterday's session, didn't we, Matt, the way the big turnaround in sentiment in the Asia session because of what we'd heard, that verbal intervention from China, that did filter through into other global markets to some extent. And Europe has benefited a little bit, perhaps, from that. Also factoring in maybe a little more of that Powell view that the U.S. economy strong enough to take the rate hikes. Maybe not. That's debatable. But this is what we've got for you on European equity markets. We do have green, whatever the reason, across the European space. Not by much, though, just up by 0.2% on the CAC 40 and on the FTSE 100. The German market a little flatter. So we could easily be sunk, perhaps, if US futures take a move to the downside. Not much conviction, it seems, in where we're trading right now. We are seeing a bit of movement to the upside in the pound. I just put this one in here, the pound against the US dollar, of course, because it's Bank of England day. Will we see the Bank of England delivering another third back-to-back rate hike? That would take us to pre-pandemic levels in terms of the interest rate here in the United Kingdom. And will it be a hawkish hike, as we saw from the Fed, or will it be a bit more dovish? Will it emphasize the uncertainty that lies ahead with war in Europe? The nickel price has reopened now, but then limit down by 8%. They expanded the limit down band, so it's not 5%, it's 8% now, but nickel sank to that when, after a few false starts, we did actually manage to get the nickel market trading this morning, but looks fairly static, as you can see there. ThyssenKrupp is down by 9.8% this morning. This is an industrial business based in Germany. They are citing war in Ukraine as a reason why they might not be able to spin off their steel unit on time. And Ocado, a grocery retailing business here, I just put this in because we need to not forget, not overlook perhaps some of the return to office trades, and this is the opposite of that. This is Ocado, a grocery delivery business, and they talked about the size of their average basket falling because of that return to office trend, Kaylee.
All right, so some interesting micro stories to watch today, Anna. There's also a lot on the macro scale that we have to pay attention to in the day ahead. ECB President Christine Lagarde will be speaking at a conference in Frankfurt at 5:30 a.m. New York time, so just about 25 minutes from now. We'll also hear Turkey's central bank. It will be reporting its rate decision at 7 a.m. New York time. Then we'll get the Bank of England rate decision at 8 a.m. New York time. So it's been a busy 24 hours, or it will be, for central banks. And then finally, on the geopolitics front, NATO chief Jens Stoltenberg will be meeting with German Chancellor Olaf Scholz in Berlin, Matt.
All right, definitely watching the reaction out of Berlin to Zelensky's speech as well. While Russia and Ukraine continued talks on Wednesday, reports of shelling kept coming in overnight. Ukraine's calls for a no-fly zone over the country haven't been met out of fear of an escalation. In an address to the German Bundestag today, the president of the Ukraine said Russia is using Germany and others to finance the war. Let's get the latest with our reporters from Medyka in Poland, from Brussels, and from Washington. We'll kick it off with Bloomberg's Aggie Cantrell, who is on the Polish-Ukrainian border. Aggie, how have we seen the conflict, the war, progress over the past 24 hours?
Hi, Matt. So yes, we've seen more and more reports of shelling and bombing on civilian areas. We've seen reports of this happening in residential buildings in and around Kiev. Vitaly Klitschko, the mayor of Kiev, pointing to this and saying that this is a difficult and dangerous situation for the city. And also in the besieged city of Mariupol in the south of the country, the port city, there has been a report of a theater that has been shelled, that was being used as a shelter for hundreds of people. And there's also a massive effort on the part of the officials in Mariupol to get civilians out of the city and into a safer territory in Zaporizhia, further north out of the city.
Aggie, thank you very much. Bloomberg's Aggie Cantrell reporting from the Poland-Ukraine border. Now to Brussels. Our European correspondent Maria Tadeo is there at the NATO headquarters. We'll hear more in a moment about what it is that the US has pledged to give to Ukrainian fighters. What's the NATO perspective this morning then, Maria?
Well, Anna, we continue here for day two. There's a lot of, as you know, debate around this idea of a diplomatic way forward that involves neutrality. The issue here, of course, Anna, is that it means everything and anything. Yesterday, we heard the Russians are now pushing for a 15-point plan that would mean Ukraine does not join NATO. This is where we are today, and would instead agree to climb down its number of military operations and make it clear that it will never join a Western military alliance. When you speak, however, to Ukrainians, they tell you a very different story. They talk about an international security deal that would be approved not just by Russia. Remember, they don't trust the Russians, they don't trust Vladimir Putin, but they talk about a United States approved plan. They also talk about the European Union, also possibly Turkey joining here. But of course, what we need to remember is that this is the diplomatic way forward potentially, but on the ground, the situation looks very different. As Aggie mentioned, that horrible shelling yesterday in Mariupol, in a hospital where there were kids there, the Ukrainian government saying this is yet another Russian atrocity.
Yeah, the human toll of this tragedy continues to unfold. Maria Tadeo at NATO headquarters in Brussels, thank you so much. And coming up in just a few minutes, Maria, we'll be speaking to John Kirby, the assistant to the Secretary of Defense for Public Affairs and the Pentagon press secretary. So stick with us for that. Meanwhile, President Biden has branded Russia's Vladimir Putin a war criminal and offered $800 million worth of new weaponry to Ukraine, including 100 armed drones. He spoke yesterday.
As well as the ammunition, artillery, and mortar rounds to go with small arms, 20 million rounds in total, 20 million rounds. And this will include drones, which demonstrates our commitment to sending our most cutting-edge systems to Ukraine for its defense.
Jack Fitzpatrick, Bloomberg government reporter, joins us now in Washington. So, Jack, Ukraine is getting drones, it's getting other weapons. What it isn't getting at this point is the jets it's asked for. Will we see movement on that?
As of now, no. It seems that the response is significant from the U.S., but much more lightweight than what President Zelensky asked for. He made his push for a no-fly zone and for actual fighter jets. What you heard the president get into was more ammunition, helmets and body armor for 25,000 people, 100 drones that can be used a little bit more short range rather than surveillance drones or anything along those lines, grenade launchers, javelins, that kind of thing. More things that would be handheld that U.S. officials feel are, they say, a little more valuable in their view to Ukraine. So it's not quite everything that President Zelensky asked for, but lawmakers on Capitol Hill knew that he would, in the words of Chris Murphy, probably ask for the moon. And the U.S. Clearly has bipartisan support for providing military support, but they have drawn a line at much more lightweight, handheld kind of measures that they're providing to Ukraine.
All right, Jack, thanks very much. Jack Fitzpatrick, our government reporter in Washington. Now, the Fed is ramping up an inflation fight in an economy that Chair Jerome Powell believes is tough enough to cope. Policymakers raised interest rates a quarter point, and Powell signaled there will be 6 more increases this year.
Every meeting is a live meeting. If we do conclude that it would be appropriate to move more quickly to remove accommodation, then we'll do so. We do feel the economy is very strong and well positioned to withstand tighter monetary policy. The probability of a recession within the next year is not particularly elevated.
It's not just the Fed in focus. The Bank of England is also out with the rate decision today. Bloomberg's Danny Berger joins us from our London studio along with Lizzie Burden at the BOE. Danny, let's start with you. What are the key takeaways from yesterday's Fed decision?
Well, Matt, the 25 basis point hike, that's not what was surprising about yesterday's decision. We expected that. Rather, it was the dot plot and the sharp cycle that the Fed is forecasting that was more surprising. They see rates around 2% to end this year, 2.8% next year. That would take us through the neutral rate, the rate at which you start to affect growth. And this is what Tom Porcelli over at RBC points out, that inflation over growth at any cost, it would seem. That's the message from the Fed, thinking that they can plow through the long-term forecast without affecting the labor market. Porcelli is skeptical that that's the case. Guggenheim Scott Minerd saying they are in an inflation panic. Now, I realize I chose 2 quotes here which are more skeptical, but they do reflect the reaction we've seen in the bond market. The 5s, 10s inverting, 5s yielding more than the 10. Of course, this is the signal, the fear that there will be a recession, and perhaps an inversion in the belly of the curve isn't as alarming of one in the 2s, 10s, but that is flattening too. We're below 20 basis points for the spread. We are just at 20 basis points. We've taken out that low yesterday in the immediate aftermath of the Fed. So the bond market's reaction is really clear. The stock market has been a bit of a head scratcher. A lot has been made of the divergence. As we saw stocks rally into the close yesterday around Powell's conference, a couple theories here. One might be the bond market saying, okay, Powell, Fed, and crew, you can't go through with what you want, so that could be good for stocks. But also remember, it was largely a positive day, positive news from China and elsewhere, so perhaps the market was also just waiting for the Fed to be out of the way to commit to a rally, Anna.
Yeah, and perhaps that is yesterday's move, and we'll see whether it comes back, Danny, but we're certainly seeing stocks fading just a little this morning, to your point. Stocks in Europe just up 0.1%, US futures now fading to the downside. Thanks to Bloomberg's Danny Berger with the aftermath of the Fed decision. Let's look ahead to another central bank. Our economics reporter Lizzie Burden is outside the Bank of England for us ahead of that decision today. Lizzie, the Fed raised rates for the first time since the pandemic yesterday, signaling 6 more hikes this year. The Bank of England, of course, has already hiked a couple of times. Will the BOE deliver a third today?
Well, it's a tricky moment for the Bank of England, Anna, because while inflation in the UK is running at a 30-year high and it's only set to climb as the war in Ukraine drives up food and energy prices, the risk for the bank of tightening too aggressively now is that it adds to the weight of war on the recovery. So, yes, traders are expecting the third straight rate rise from the bank today, but the question is, how big will it be? There may be some on the Monetary Policy Committee who want to go for a 50 basis point hike to get in control of inflation expectations now, but there may be others on the committee who say that inflation may tame itself by weighing on demand, and there's not much that a rate rise now can do about the immediate crisis. So Bloomberg Economics reckons we'll land in the middle at 25 basis points, which would take the key rate to 0.75%, back where we started before the pandemic.
All right, just under 3 hours to go until that decision. Thank you so much to Bloomberg's Lizzie Burden outside the BOE. Now let's get back to Bloomberg's Maria Tadeo in Brussels, who is joined by John Kirby, Assistant to the Secretary of Defense for Public Affairs and Pentagon Press Secretary. Maria.
Yeah, and I'm very happy to be joined, of course, by Mr. Kirby here, who's been leading and also joining this U.S. delegation here at NATO for 2 days. First of all, I want to ask you, yesterday we heard from President Zelensky almost just ask for help, where he said the situation is dramatic on the ground in Ukraine, and the United States has to lead this. We know that you're deploying big weapons into the country. Can you debrief what's going into Ukraine?
We have been very, very focused on trying to get Ukraine the kinds of material, weapons, and systems that we know that they are using quite effectively in the field to defend themselves. So we've talked about Stinger missiles. We've talked about Javelin anti-tank missiles. We're also working with allies and partners to see what other capabilities and systems they might have that the Ukrainians could use, for instance, in the area of air defense. And so we're having these active conversations right now. We're also helping to coordinate the delivery of nations' material to Ukraine, not just ours, but others as well.
And, sir, we see the Ukrainians are fighting like hell. It's been 3 weeks. I mean, they really fight for almost an existential question of their country. How do you see the state of this army?
They are fighting very bravely, very valiantly, and what we would say is also creatively. They're using their superior knowledge of the terrain and their own geography, as well as their nimble behavior in terms of using these systems they're getting quite effectively, and they have essentially stalled the Russian advance. Now, again, we're going to contribute, the United States, contribute to that effort by them. You saw President Biden announce another $800 million. That brings to $2 billion in just the last year that the United States has given in security assistance to Ukraine, because we know that they are good at using these systems in the field.
And President Putin, of course, yesterday gave out a speech. The content of that speech was quite something, where he talked about Russia will prevail here and we are going to meet our goals. How concerned are you about the response from Russia?
What we have not seen, the Russians, for all the talk about wanting to find a diplomatic path forward, we haven't seen them act on that.
You don't believe that?
There's ceasefire talks going on, and of course we support that, and we want to see a negotiated settlement. That's the way forward here. But what you're seeing by the Russians on the ground is a full-on commitment to military operations. They continue to hammer cities like Kharkiv, Chernihiv, Mariupol, Kyiv with long-range fires. That's a fancy Pentagon word for bombardment by missiles and rocket rocket systems. And they just, you've seen it for yourself, how much damage and death and destruction they're causing. So while at one time they say they want to find a negotiated settlement, they are militarily continuing to try to press for advantage and causing an amazing amount of death and destruction in the wake.
Haven't seen any change over the past 48 hours.
No, the fighting continues. I mean, again, you guys with cameras on the ground can see that for yourself. The fighting continues, the death and destruction continues, and what we would say is that one of the options Mr. Putin still has available to him, and he's got lots of military options, but he also has the option of a peaceful negotiated settlement, and we would like to see those efforts really bear fruit in some sort of earnest way.
And the United States has made that very clear a number of times, but I wonder, you're here and you were telling me off camera you're going to Bulgaria, you're going to Slovakia.
That's right.
Why are you doing this? What's your message you're trying to say, particularly to Eastern Europeans?
Secretary Austin's message here at NATO was obviously that the United States is going to continue to do what we have to do to bolster the NATO defensive and deterrence capabilities, particularly along the eastern flank. We've added almost 20,000 now, more U.S. troops to Europe than before the invasion. And so we're going to Slovakia next this afternoon, and then Bulgaria the next day, to very, very important NATO allies on the eastern flank. We're going to reinforce that message. We're going to make sure they know that we're willing to continue to talk to them about their deterrence and defense needs, and if there's other ways that the United States can help.
And do the Russians get that? Because we saw on Saturday that there was an explosion that happened very close to Poland. Poland is surrounded by Belarus and Ukraine. Yeah. In your mind, do Russians get that message? Do not play any games on NATO grounds.
We have been very clear with Mr. Putin and with the Russians, both in private conversations and certainly with our public messaging, that the United States will defend every inch of NATO territory. We take our Article 5 commitments to this alliance extremely seriously. That's why Secretary Austin has been here for 2 days, and that's why we're making these 2 other stops on NATO's eastern flank.
And sir, just as a final question, when you speak to officials from Lithuania, Latvia, Estonia, Poland, they do worry, however, that the war could escalate into their territory.
Sure.
Do you fear a spillover from this war, which is horrific? I mean, we've seen the pictures.
Nobody wants to see this war escalate beyond where it is, and it's already escalated to a degree. You can look and see what's happening in Ukraine. Again, the death and destruction that the Russians are causing. Nobody wants to see it escalate beyond that. That's in nobody's interest, and that's why, again, our message to NATO has been very strong, very clear, very concise. We're going to make sure that we can defend NATO territory.
Well, sir, thank you so much. We appreciate your time, and of course, safe travels across Europe.
Thank you so much.
Your trip. Thank you so much.
Thank you.
And of course, that was John Kirby speaking to us. Of course, NATO Day 2 continues, and you heard that number. We're increasing our troops on the ground in Eastern Europe, very much reflecting the language from the Secretary General Stoltenberg, saying we are going to see more troops, particularly in the Baltics, but also for longer periods of time.
Okay, Maria, thank you very much. And important, Maria talking there about troops in NATO countries. Bloomberg's Maria Tadeo on the ground there at NATO headquarters. Interesting, Matt, to think about the global response to what the US has offered here. Interesting to keep track on what the Chinese think, because they're walking a complex line, as we know. And China saying that NATO has escalated the Ukraine situation with weapons.
Yeah, I think that's a really important, a really key part of this problem. China has, in a sense, joined with Russia, well, clearly in terms of the friendship commitment that they've made. A couple of times they've said they oppose war and that they support Europe, but here it looks like they've gone fully in the direction of Russian support against the U.S.
Right, we'll stick with this theme, of course. Later today, we'll speak with the former U.S. Defense Secretary Leon Panetta. That's at 12:30 p.m. in New York, 4:30 p.m. London time. This is Bloomberg.
Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. In China, the latest COVID outbreak appears to be easing. Authorities reported the lowest number of cases so far this week. And in the epicenter of the latest outbreak, Jilin, infections have dropped from recent highs since the province was locked down on Monday. More chaos in the London nickel market. Brokers trying to sell at the 8% daily limit had their orders canceled. That prompted the London Metal Exchange to delay the opening of electronic trading. It's a further setback to the LME's attempts to restore order following a week-long suspension. The House is preparing to revoke Russia's free trade status with the U.S. That would enable the U.S. to impose higher tariffs on Russian goods. If it becomes law, Russia would be put in the same category as countries such as North Korea and Cuba. Meanwhile, Russia says it has made a $117 million interest payment due on $2 bonds. The money was sent to Citibank in London, Moscow's Eurobond payment agent. Russia had until the end of business Wednesday to honor the coupons on the two notes, but there was concern it might default because a large chunk of the country's foreign reserves have been frozen. So, Anna, I don't think it is fully clear what yet has happened with those dollar bond payments, but at least we're getting some details now out of Russia.
Yeah, absolutely. And the impact, if we didn't see payment there, what kind of read across into other assets that would have, some people say a lot, substantial, others say nothing at all. So we'll continue to watch that story. Ron Temple, co-head of multi-asset and head of U.S. equity at Lazard, joins us next. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The Fed is ramping up an inflation fight in an economy that Chair Jerome Powell believes is tough enough to cope. Policymakers raised interest rates a quarter point, and Powell signaled there will be 6 more increases this year. The Bank of England is almost certain to reach another milestone today. It's expected to take interest rates back to their pre-COVID level. Policymakers are likely to increase their benchmark a quarter point to 0.75%. The expanded arsenal that the US is sending to Ukraine includes 100 armed drones. Bloomberg's learned that the drones are tube-launched from the ground and plunge into their targets. Meanwhile, Vladimir Putin warned that he will cleanse Russia, in his words, of what he called scum and traitors who work secretly for the US and its allies. Good morning, everybody. Also happening this hour, the ECB President Christine Lagarde is speaking at the ECB and its Watchers Conference over in Frankfurt. We are monitoring this, of course. Christine Lagarde saying that the Russian invasion has cast a shadow over Europe and, of course, war on the European continent very much on her mind as she delivers this speech. You can continue to keep up to date with what she is saying, and we'll bring you any headlines. Live Go is the function to use on your terminal. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons over in New York. And Matt, a little bit difficult to find direction in the European trading day this morning and in US futures.
Yeah, it's a little bit more difficult to tell the market story with such small and maybe slightly nuanced moves. So we're not seeing a lot of drop in the S&P futures, but they are down 0.1%. Of course, it shouldn't be a huge surprise after back-to-back gains of 2% plus gains, days of 2% plus gains, I should say. The U.S. 10-year yield coming down a little bit, but still a relatively high level, 2.1261, the level there, and NYMEX crude coming up a little bit, but still down about 8 or 9% for the week, 98.79. So you can see that we have a little bit of fluctuation, a little bit of maybe correction in these assets, considering what we've seen over the past couple of trading sessions. The same can be said for Bitcoin right now, down about 1%, but still over 40,000 at 40,881. Kaylee, what are you seeing in terms of pre-market movers?
Well, what I'm watching is really tied to that oil story you were just talking about. I'm taking a look at the Energy Select Sector SPDR ETF, which is essentially helpful to gauge how the sector as a whole will do come the opening bell. That ETF is coming off of its worst 4 days since last August and the biggest 4-day decline since last July. But we are seeing a little bit of a rebound in the pre-market session this morning with the rebound in oil. That ETF is up about 1.4%. And as for some of the individual energy names moving to the upside, Occidental Petroleum is one of the outperformers. It's up around 2.5%. You also have the likes of Schlumberger and Exxon, each moving higher to the tune of 1.5%, Anna.
So that's the energy story here in Europe. Then let's check where we are on the European equity trading session. An hour and a half into our trading day, of course, because of that reduced time difference between the US and Europe for this week and next. The stock Europe 600 is up by 0.2%. The pound in focus as we head towards that Bank of England rate decision. Will we see interest rates lifted to that pre-pandemic level? And will it be a hawkish hike that we get from the Bank of England, just as we saw from the Fed, arguably, or will they be emphasizing all of the uncertainty attached to war in Ukraine? ThyssenKrupp also talking about war in Ukraine because they're saying that this means for this industrial German business there could be delays in selling off one part of their company. And nickel in focus in London, certainly because of the closure that we saw in the LME nickel trade for a week or so. It did try to start yesterday. It did manage to start this morning, but pretty much instantly went limit down 8%, of course. That is the new tolerance that we have for the movement in that nickel price here in London. Matt?
All right, so we'll be watching the nickel. I guess reopening is the right word, but it's not happening that smoothly. We'll continue to watch that. The Fed is in an inflation panic. That's the latest from Guggenheim CIO Scott Minerd. He spoke to Bloomberg after the decision yesterday.
The Fed thinks it can control interest rates, and so somehow it's going to manage its way through. So. I think that the Fed has largely abandoned monetary orthodoxy. It's trying to be too cute in how it's managing this.
Joining us now is Ron Temple, co-head of multi-asset and U.S. equity, head of U.S. equities, as well at Lazard Asset Management. Ron, great to get some time with you. Let me get your take on the Fed yesterday. Certainly, Jerome Powell is talking a strong game.
Yeah, I think the Fed's walking a real tightrope here. They need to signal their determination that they're going to tame inflation. And so they have to really talk a tough game. But I think a lot of that talk is about buying time, to give the Fed time to see what happens with the economy, because we really don't have experience before with tightening in 3 dimensions. I kind of think of this 3D tightening as higher rates, balance sheet runoff, and a tax on consumers from higher commodity prices. So again, the message from the Fed is we're on top of this. We're not going to let inflation get out of control. But in reality, if they actually do what they talked about doing, if they follow through on 7 hikes this year and 3 to 4 more hikes next year, along with that balance sheet runoff, along with the tax on consumers from commodities, I worry that they're actually at great risk of a policy mistake and tipping the economy into recession.
Okay, good morning to you, Ron. And is that what we're seeing in bond markets? Is that what we're seeing bond markets express, that nervousness around whether we get whether the Fed moves too quickly and essentially takes us into a recession?
Yeah, I thought the reaction yesterday was interesting in that there was a bit of a contrast between the bond market reaction and the equity market. I mean, the equity market selling off after the news made a lot of sense to me because, you know, this should be a signal that discount rates are going to be higher and you should move away from speculative growth, you know, companies where the cash flow is far in the future, and move into companies with cash flow now, more quality. The bond market, I think, is right to be a bit nervous. But when I look at inflation break-evens in the bond market, it seems that that part of the bond market is saying, okay, the Fed is serious. We've taken 20 bips out of the break-even on the 5-year notes and about 20 basis points on the 10-year in the last week. But I do think there's room for nervousness here.
How much is it right for the Fed to set out the path with, I mean, not certainty, but with quite a bit of certainty, I suppose, attached, given that other central banks around the world might be emphasizing difficulties in predicting growth with war taking place in Europe right now?
Yeah, I think it was interesting watching the press conference how frequently Chair Powell indicated that the Fed is acutely aware of the need to tame inflation, control inflation. So I think there was a signaling to the markets and to Washington. But you're right about this degree of confidence. There is not a lot of visibility. And I do think what the Fed realizes is the economy is decelerating. Even without the Ukraine invasion, the economy would have decelerated this year. Inflation was going to basically cool off. And I do think we still have about 1.5 to 2 million workers who will come back into the labor force in the U.S. in the next 12 to 18 months, which should also take a bit of the edge off of wage inflation. So there are a lot of moving parts here. And if I were at the Fed, I would be highlighting data dependency more than I heard this week.
Okay, maybe we get that from the Bank of England. Kaylee?
Well, Ron, I'm wondering what the line to draw is between a Fed that may be more aggressive in tamping down inflation into margins and your outlook for earnings from U.S. companies.
No, I think this is going to be very important. I think the environment for companies is going to get tougher. I mean, financial conditions have already started to tighten on the back of the Fed talk in the last number of months. And I think what was very clear from yesterday's messaging is that there's more tightening to come. And so if you think about that, it does mean the cost of financing will go up and access to financing will get tighter. And so I do think, yet again, this is an opportunity for investors in the equity market to really carefully examine each security they're considering owning and understanding what their balance sheet condition looks like, what do their cash flows look like. And this is an environment where we should see increased dispersion in market. It should be a stock picker's market.
Ron, while we're having this conversation, Christine Lagarde is continuing to speak in Frankfurt, talking about the war posing significant risks to growth, the need for the ECB to be gradual and flexible because of risks and ready to revise its plan if needed. With the risk to Europe in mind, how does that position U.S. equities relative to other markets like it?
Well, I do think the U.S. is in a good position in that regard, and that the U.S. economy is less susceptible to what's happening in Ukraine. Again, having energy independence is a huge benefit at this point. The price shock to consumers and corporates in the U.S. is much less severe than what you're seeing in Europe. And so I do think it is a very different position for the U.S. And hence it does make sense for Madame Lagarde to be speaking more about uncertainties in terms of policy and how that might affect what they're going to do at the ECB. I do think as well, though, for U.S. equities, it does position those as being a preferred asset over European equities at this point, just given a lack of vulnerability or a more insulated position.
Ron, I want to ask about ESG. I don't really think it's out of left field, although it may sound that way. It's just, I wonder, are these developments, the war and the energy issues that we face, are they a headwind for ESG because we're looking to, you know, drill more for oil and get maybe coal out of the ground that we would have left there previously? Or is it a tailwind in that it pushes us to work harder on renewables and cleaner energy?
I actually think this is a benefit to ESG executed properly. If we look at ESG, in my view, ESG is not about having a restriction list or saying you can't own companies X, Y, and Z. Instead, it's about saying what are the material risk factors and opportunities for each company that relate to ESG, and let's make sure we quantify those and incorporate them into our share price target. And I think for investors, you know, the invasion of Ukraine is a huge wake-up call that we need to reduce our dependency on fossil fuels. I mean, the ultimate way to punch at Putin is to reduce fossil fuel use, and we should see the U.S. and Europe respond to that, and frankly, the rest of the world. Climate change is enough of a reason already, but we have yet another reason. You can't have national security without energy security, and I think Putin has made that very clear to Europe.
Yeah, an answer that is increasingly being heard, or a view that is increasingly being expressed across Europe. Ron, thank you very much for your time. Ron Temple of Lazard Asset Management, thank you very much for joining us. Just a quick recap of the lines we're hearing from Christine Lagarde, ECB president, saying the ECB is mindful of risks and ready to revise the plan if needed. Inflation is increasingly likely to stabilize, she says, at 2%. The war poses significant risks to growth, so they're emphasizing the risks to growth, but also talking about the war setting in motion new inflationary trends. So interesting to compare and contrast the emphasis on growth there versus inflation elsewhere, perhaps rightly so. You can continue to watch Christine Lagarde's remarks live go. That is the function to use on your terminal. Coming up, we'll get back to the war in Ukraine. Leslie Vinjamuri, Chatham House head of US and the Americas program, joins us on the latest. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
They're using their superior knowledge of the terrain and their own geography, as well as their nimble behavior in terms of using these systems they're getting quite effectively, and they have essentially stalled the Russian advance.
Pentagon spokesman John Kirby speaking about Ukrainian forces earlier this hour with our Maria Tadeo. He said Ukrainian forces are using weapons received from allies in an effective way and that Russia is not acting like it wants to settle. Joining us now is Leslie Benjamin, director of the U.S. and Americas program at Chatham House, to discuss this further. So, Leslie, when it comes to those weapons, obviously the president of the U.S. announcing yesterday that more are coming, including armed drones. What is not coming is fighter jets. Why is that conversation so much more difficult? Do you anticipate the U.S. will make that move?
Well, I think that they're weighing it up step by step. You know, there's a lot of intelligence. They're looking very carefully at a couple of things. One, we know, is that fear and that determination not to escalate into a position that the U.S. doesn't want to be in, and quite frankly, none of us should want the world to be in. But a second, and I think this is a really important point, is, you know, what will be most effective in terms of helping Ukraine and Ukrainians stand their ground and resist and fight. It was anticipated. And there's even a sense that maybe Zelensky is at the moment backing off a little bit and calling for those fighter jets. So I think there are all sorts of calculations, but it's being assessed on a daily basis, on an hour-by-hour basis. And President Biden has been very careful not to let domestic public opinion or congressional public opinion make these choices for him. He's relying on his intelligence, on his military experts, and on a very clear understanding of the context.
Yes, and Leslie, what will his military sources be telling him about the Russian reaction function to NATO or the United States supplying further weaponry of a different class to Ukraine? Is there a firm understanding? Do you think the US thinks it has a very good understanding of what Russia will deem to be NATO in the conflict or NATO outside of the conflict?
Well, I think, yes. I mean, there are some really intelligent people at the top. We know Colin Kahl is very schooled in these things. Number 3 at the Pentagon. They have been gaming these things out long before this conflict. What we've seen is that those who are at the top echelons of decision-making in the US were more conservative when they were deputies, when these sorts of war games were played. So I think we have a very sophisticated set of decision makers who are, you can never know exactly how Putin will respond. There's a real, question mark as to how rational he is, how far he's willing to go, and how that changes for him as time goes by. Clearly, the fact that he's willing to attack civilians, we've seen what's happening in Mariupol, raises grave considerations. But that sort of question of what effects the weapons will have and whether it will lead to some sort of reaction that unwittingly or unintentionally brings NATO into the equation, that is something that is clearly to be avoided.
You know, there's a couple of headlines Anna and I were talking about earlier, Leslie. China saying that they feel the U.S. is escalating the situation in Ukraine. And I thought it was just very interesting that they seem to throw their whole bag in with Russia again. They're saying culprits that worsen the Ukrainian situation should reflect. And I think in this situation, they're calling the U.S. culprits. They're also saying that they want the situation to end as soon as possible. But what is China doing here, and how important are they as kind of the third player?
I think China is extremely important. We know it's important on sanctions. It's diminishing the effectiveness of those international sanctions for sure. There is a real question as to whether China would get engaged as a mediator. China might be making a calculation that it can have as much influence on the U.S. as in Russia. It's entirely possible that Putin is impervious, or that China can't have the impact that it would like to have. Certainly, China has no interest in seeing these kinds of war crimes committed. It doesn't, has never been for violations of sovereignty, but it is standing firm with Russia as it has. And perhaps there's a perception that it can have more impact by shaming or naming and shaming the U.S. in its actions. But I just don't think it's going to work. That Western unity is so strong. But certainly the Chinese probably see the fact that the U.S. is sending that lethal aid, all those weapons, as being a violation of some sort of an intervention in effect.
Let me ask you just one final question on the financial situation. I know you focused on the U.S. and America's program at the Chatham House, obviously, though we're all watching, what motivates Vladimir Putin, or what, cuts him off. And we've been following along to see if Russia will default on their international bond payments. Just about an hour ago, the finance ministry in Moscow said that they have made an interest payment, but it doesn't look likely that they'll continue to be able to participate in the international finance, with the exception of, using China as a partner. How much does that, put Vladimir Putin in a corner? Is it dangerous?
It's certainly going to present significant costs for all of us. The international economy is going to be impacted. We know what's happening with wheat prices. We understand the energy situation. We have some sense of where that could go. And be assured that U.S. decision makers are also aware of this and calculating what they're going to say publicly about when it might make sense to consider lifting some sanctions is going to be very different than what they're saying privately. But those calculations are certainly being made. And yes, the cost is going to be very, very high.
Okay, Leslie, thanks so much for joining us. Leslie Vinjamuri, Director of the US and America's Program at Chatham House. Thanks for your time. Coming up on this program, we'll stick with the sanctions story, but from a different angle. One of Russia's original oligarchs weighs in on sanctions. More from our Big Take story next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons over in New York. Now, is sanctioning Russian oligarchs going to have an impact on President Putin's behavior in Ukraine? Mikhail Fridman, one of Russia's original oligarchs, argues that punishing billionaires like him shows a troubling misunderstanding of power in Russia. That's the subject of today's Big Take story. Joining us now is the author of that story, Bloomberg senior investigations writer Stephanie Baker. Stephanie, good to speak to you. So, where do you think it takes us when we hear somebody like Fridman then pushing back on his ability to actually influence Kremlin policy, influence Vladimir Putin's policy?
Well, look, the sanctions have been the one tool left in the toolbox of the West to respond to Russia's invasion of Ukraine. And I think the most high profile of those have been the sanctions of the oligarchs, including the seizure of yachts and jets, and that all looks really great. But when you look at how the sanctions are affecting Putin's behavior, I would say probably the most punishing ones have been the central bank reserve freezes, the SWIFT restrictions, kicking Russian banks out of the global financial messaging system, limits on Russian oil. And I think we've tried to sanction oligarchs in the past, and there's been a kind of limited success rate. So as part of a package of sanctions that's comprehensive, sanctioning the oligarchs and their assets in Russia and outside, looks reasonable and like it would be part of a coherent strategy. But what you've seen so far is that some of their assets in Russia haven't really been hit hard, but their assets in the West have. And that was one of the arguments that Fridman made to me. I didn't understand why Alpha Bank, for instance, had light touch restrictions while his assets in the West were totally frozen.
Stephanie, unfortunately, we don't have any more time, but I loved your piece, and I recommend to all of our viewers and listeners that they check it out. You can do that on NI Big Take on the Bloomberg terminal. You can also go to Bloomberg.com to read Stephanie's piece on her, I guess, Tea with Fridman would be a good name for that as well. Take a look at what's going on in the markets right now. It looks like futures are moving further to the downside, now off 0.2%, as investors catch wind of a little bit of curve inversion. The 5s and the 7s are now trading above the 2s in terms of the yield. The 3s are right there, just under 212, and the 2s are just 18 basis points away. So keep your eye on the curve, because an inverted yield curve is not something that the markets like too much. Surveillance is up next. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. there's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
There's just too much uncertainty and too many negative headlines for investors to stomach.
Certainly with the war in Ukraine, inflation is going to become even worse.
This is really a time where you have to be careful.
It's a stagflationary shock, but we think there's strong enough momentum that you're going to see growth around 3%.
The combination of tighter monetary policy, obviously the geopolitical piece, is slowing down growth.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Lisa Abramowitz and Katie Lyons, I'm Jonathan Ferro. Futures down 1/3% on this S&P. Bramo, we've got to start with this bond market move.
Honestly, yesterday, huge move. Today, retracing a little bit of it. Was this a hawkish Fed meeting? Would you say that? Because to me, that was the rhetoric, and yet the market took it as something slightly different.
Lisa, 5-year yields above 10s. 7-year yields above 10s, and 3s are basically there already.
Basically, people are saying that the Fed cannot accomplish the soft landing that they seem confident that they can accomplish. They're saying, no, you are going to spur some sort of downturn. You are going to spur some sort of slowdown. The curve inversion that you're starting to see is a predecessor, is basically one sign of that coming to the fore. I'm not seeing it in equities, but certainly the bond market setting a clear message.
And let's throw in the situation in Russia as well from the Kremlin. Reports of major progress in Ukraine. Katie Lyons, that's wrong. Reports of major progress in Ukraine talks, quote, wrong.
Of course, that was the story published in the Financial Times yesterday, the idea of a 15-point plan coming from Russia to kind of outline what a peace agreement might look like, the idea of neutrality of Ukraine. Ukraine wants security guarantees. There's a lot of remaining questions, John, which maybe is why the Kremlin is saying that major progress has not yet happened, because it's going to take quite some time to iron out all of those issues.
Yesterday, the President of the United States referred to Vladimir Putin, Lisa, as a war criminal. The Kremlin saying Biden calling Putin a war criminal is, quote, unforgivable. That does not look good this morning.
No, I was really shocked, though, by the rhetoric coming out of Vladimir Putin yesterday about cleansing the Russian soul, about basically ejecting anybody who wasn't a patriot. This was a little bit alarming to a lot of people who heard a new tone, a new rhetoric, a hardlining kind of approach that, frankly, sounded very fascist.
Can you keep up with talks this morning? In
No.
fact, over the last week, the S&P now down about 0.5% off the back of some of this.
Honestly, I can't keep up with what to believe, because we did hear from both the Ukrainians as well as from the Kremlin that there did seem to be some progress about the idea of neutrality, and yet all of the details seemed so far to reach. I'm not sure what we're going to see in order to get some sort of resolution. It doesn't seem like it's realistic, at least in the very near term.
Let's put it all together and whip through this market for you. Equity futures down 0.5% on the S&P. On the Nasdaq, we're down 6 or 0.7%. We're talking about that big rally in the bond market. Yields lower by 7 basis points at 211 on 10s. Go through the rest of the curve. 3s at 210, 5s at 211, 7s at 214. This curve is slowly inverting. Crude advancing up a little more than 4%, approaching 5% higher. Elisa, 99.72. Those headlines out of the Kremlin this morning aren't exactly great, are they?
No, it definitely gives the indication that you're going to get an ongoing conflict, especially because it's unclear what the off-ramp is for either side. What I'm watching today is a gauge of what the economic ramifications and, frankly, the policy ramifications of this conflict on a prolonged level could be. The OECD comes out with their report actually just minutes ago, and they were talking about how it could potentially reduce global growth by 1 percentage point, and that actually could increase the inflation that the average consumer feels by 2 percentage points this year. A pretty stunning number. At 7:30 a.m., we'll break it all down. OECD Chief Economist Lawrence Boone is joining us here on Bloomberg Surveillance. At 8 a.m., we get that rate decision from the Bank of England. It is expected to be the third consecutive rate hike, third consecutive meeting where they did make a move. What is their longer-term projection? The interesting thing is, if you take a look at what's going on in the rates market, they have actually brought back expectations for rate hikes down the line, thinking that because of the war in Ukraine, because of what we're seeing with respect to gas and oil prices, they're not going to be able to hike as much, and you're not going to see as much growth. And at 8:30 a.m., we get a slew of economic data from the United States, February building permits, housing starts, and initial jobless claims. And I am watching those as Fed Chair Powell talks about an extremely tight labor market. How tight is this labor market? Yes, when you look at the unemployment rate, it looks like it is pretty tight. If you look at the participation rate, and here's the question, John, that a lot of people were raising after the press conference yesterday. Does it indicate that there are a lot of people waiting on the sidelines to get back in should the conditions warrant? Is that what we're going to see, which will bring down wage inflation and actually relieve some of the pressures that he's talking about?
Elisa, thank you. We'll pick up on that in just a moment. A turnaround in euro-dollar. It was positive. It's now negative. Euro-dollar at 110.31. Several headlines coming out of Russia, the Kremlin. More talks with Ukraine expected today. This line right here. Reports of major progress in Ukraine talks. Wrong. Now, Lisa, what's confusing about this to me is that they're not just reports. It was some of the communication we'd had from Sergei Lavrov, the foreign minister of Russia, earlier this week, which made people think that we were making some progress.
To me, this raises the question that you've raised before, which is who holds the cards? It is one person. Does Sergei Lavrov speak for that one person, Vladimir Putin? How much credibility does any communication have, frankly, out of that entire office, but also from anyone other than Vladimir Putin?
The president of the United States calling Vladimir Putin a war criminal yesterday. The Kremlin responding to that, saying Biden calling Putin a war criminal is unforgivable. We caught up with John Kirby, the Pentagon press secretary. This is what he had to say.
The Russians, for all the talk about wanting to find a diplomatic path forward, we haven't seen them act on that. There's ceasefire talks going on, and of course we support that, and we want to see a negotiated settlement. That's the way forward here. But what you're seeing by the Russians on the ground is a full-on commitment to military operations. Our message to NATO is it's been very strong, very clear, very concise. We're going to make sure that we can defend NATO territory.
Team coverage starts right now with Bloomberg's Jack Fitzpatrick in Washington, Maria Tadeo in Brussels. Maria, let's start there. Those lines out of the Kremlin.
Well, Jonathan, once again, we see that the actions and the words from the Russians pretty much change by the hour. And you mentioned this yesterday. Vladimir Putin gave a speech. It went on for 7 minutes in which he talked about completing this operation. He talked about a fight for the soul of the Russian nation. He talked about almost cleaning the country from traitors and Russians who do not live by Russian values. He repeated that. So that language is very different. It would not point to a diplomatic solution for the time being. If anything, this is the harshest Putin we've heard so far since this invasion. For many, what it shows is that it really signals this war is not going well for Russia. Russia's seen a military operation that has now almost stalled in all of the major areas. They're not been able to capture the main cities in Ukraine, and the capital of Kiev is still under the control of the Ukrainian governments. By the way, when you speak to the Ukrainian governments, they tell you everything that we see reported on the press for the time being about neutrality, those are Russian ideas. They're not our ideas. We have other talking points, and for us, this is not just a bilateral negotiation between Russia and Ukraine. We want to see guarantees that are approved by the United States, by Europe, but also countries like Turkey. Well, and on the subject of those security guarantees and of neutrality, do we have any idea what that realistically would look like when it comes to the Europeans to NATO, Maria?
Well, we don't, because the reality is this is now a catchphrase that means everything and anything, and it really depends who you ask. When you talk to the Russians, they still continue to use this word denazify, and we really need to go to the culture of this word. If you're a Russian speaker and you're called a Nazi, this completely dehumanizes you. This is a very almost emotional insult in Russia. Of course, it goes back to their history. When you speak to the Ukrainians, they tell you neutrality means very serious international security guarantees. Also, remember, they still believe that even if NATO gets ditched, they want to join the European Union, and that membership bid is very much on the table. So at this point, we can talk about neutrality, but when you speak to the two different sides, they tell you a very different story about what they mean, but in particular, what they hope it means in the future.
Yeah, and Maria, that dehumanizing kind of aspect also in the language, the rhetoric of Vladimir Putin talking about how anyone not deemed a patriot would be treated like a fly to be spat out. Jack, the response in Congress yesterday to the very emotional testimony by Vladimir Zelensky and the video that he played, how much feeling is there to do more in addition to drones? Was there any willingness to really answer his request to preserve a no-fly zone over Ukraine?
No, there wasn't any willingness demonstrated on Capitol Hill on the no-fly zone, and there was some pushback, to at least polite pushback by lawmakers who admire President Zelensky, but pushback nonetheless on the idea of sending fighter jets. Adam Smith, who's the House Armed Services chairman, said he has some concerns about how effective those planes would actually be being sent to Ukraine. You saw the response from the White House, which is more handheld weapons that they're sending, body armor, javelins, stingers, 100 fairly lightweight drones. There is a conversation happening on Capitol Hill about what would need to be in a subsequent bill to provide more aid. There's an assumption that there will be more aid needed, but the conversation is about economic sanctions on Russia, humanitarian and more lightweight defense needs, and there really wasn't any follow-through on the idea of a no-fly zone and even some skepticism about fighter jets.
Hey, Jack, wonderful to catch up. Jack Fitzpatrick, Maria Tadeo. Maria, great interview in the last hour with John Kirby as well. Thank you for that. Futures rolling over in the last 10 minutes. We're down about 0.6% on the S&P. Here are the headlines from the Kremlin spokesman, Vladimir Putin's spokesman, Dmitry Peskov, saying that more talks with Ukraine are expected today. The Ukrainian negotiators are in no rush, and that talks of major progress in Ukrainian talks are wrong. Now, reports of major progress in Ukraine talks are wrong. Lisa, what do you think they're referring to there specifically? The report from the FT yesterday, the general tone of things right now? Because again, I'll repeat this. A lot of people thought talks were improving because of the words directly from the foreign minister, Sergei Lavrov.
Yeah, honestly, I think that this shows that they're trying to message something and they're flipping on the messaging back and forth. Also, again, how can Sergei Lavrov be trusted to really represent Vladimir Putin's doing when you get this kind of communication out of the Kremlin? I honestly don't know what to make of it, but I do know it is not encouraging at a time when a lot of people need to see a ceasefire to even begin the discussion.
Futures down 0.6% on the S&P. Katie, just looking at crude. Brent crude 102, WTI 99, up by almost 5%.
Yeah, almost back to that triple-digit level. And in the bond market, John, you're seeing yields right around session lows. The 10-year Treasury back down to 2.11, but still the curve is flatter, which comes back to the Federal Reserve, John.
This curve is slowly inverting. We'll talk about that Federal Reserve decision with Jean Bavin of BlackRock in the next hour. You do not want to miss that. It is the day after the Fed, so you know what that means. TK's away for a few days and getting a rest. He'll be back with us sometime next week. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The Bank of England is almost certain to reach another milestone today. It's expected to take interest rates back to their pre-COVID level. Policymakers are likely to increase their benchmark a quarter point to 0.75%. They're responding to a worsening inflation outlook. And the Fed is ramping up an inflation fight in an economy that Chair Jerome Powell believes is tough enough to cope. Policymakers raised interest rates a quarter point, and Powell signaled there will be 6 more increases this year. He assured Americans that the economy won't tip into recession. And the House is preparing to revoke Russia's free trade status with the U.S. That would enable the U.S. to impose higher tariffs on Russian goods. If the House action becomes law, Russia would be put in the same category as countries such as North Korea and Cuba. In China, the latest COVID outbreak appears to be easing. Authorities reported the lowest number of cases so far this week. And in the epicenter of the latest outbreak, Jilin, infections have dropped from recent highs since the province was locked down on Monday. And more chaos in the London nickel market. Brokers trying to sell at the 8% daily price limit had their orders cancelled. That prompted the London Metal Exchange to delay the opening of electronic trading. It's a further setback to the LME's attempts to restore order following a week-long suspension. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Big things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focused on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
Now I'm once again using my presidential authority to activate an additional security assistance to continue to help Ukraine fend off Russia's assault. This will include drones, which demonstrates our commitment to sending our most cutting-edge systems to Ukraine for its defense.
The President of the United States from New York City this morning. Good morning. Futures are lower by 0.5% on the S&P 500. Rolling over just a little bit on this line from the Kremlin. Reports of major progress in Ukraine talks. Wrong. Throw that into the mix. Yields lower again by 8 basis points on 10s to 210.65. And this curve, Lisa, slowly inverting. And the conversation we had yesterday, just going through the forecasts of the Federal Reserve, the plan implied by the dot plot, is that achievable? Fanciful? The word that Diane Swank used, Fantasyland, Scott Minard. We had pretty much a consensus on yesterday's program, didn't we?
Basically, that the projections that they had didn't really add up, that they basically were not achievable. And frankly, in all of the notes, as we were talking about before, a lot of people said the market just doesn't buy it, which is the reason why you're seeing this inversion. They don't think that the Fed can actually achieve the soft landing that they say is likely.
Let's talk about that right now with Jens Nordvik, the founder and CEO of Exante Data. Jens, is the plan implied by the forecasts achievable?
Well, so the plan is changing very, very fast, right? If you compare the dot plot from December to the dot plot we had here in March, right, we had literally 100 basis points change in what they're expecting for this year. So these plans are in flux. I think we are facing clearly the biggest inflationary challenge we have for several decades, and the Fed is ready to do something about it. They went at this meeting, they're going to go at the next several meetings. And I think at the next several meetings, the debate is not going to be about where they go, it's going to be about whether they accelerate the pace. So I think there is going to be a debate about 50 basis points, certainly in May and June. That's going to be something that's up for discussion. And you can see that in how the dots are spread out, right? We have now a significant minority that actually believes that they should do more than 25 at each meeting. So the Fed is definitely shifting gear, and they've totally revised their outlook relative to 3 months ago.
Jens, we were talking about this yesterday, how the projection from the Fed is a 3.4% unemployment rate at the end of this year, at the end of next year, and just tipping up a little bit in 2025. Is that achievable, basically, with this type of rate hiking cycle, to not have any impact on employment and other base, broad economic metrics?
What is so tricky about this cycle is that we have so much inflation, right, that it really matters whether you look at the nominal rate they are delivering or the real rate. The real rate on any measure is just incredibly low, right? So even the people who look at like financial conditions tightening, if you do that in nominal space, okay, it looks like we're getting back to sort of normal degree of tightness. If you do it in real space, conditions are still extremely easy. So this is something that's very, very tricky to sort of calibrate. Is it actually tight? I would also say, like, if you look at the housing market, we have a housing market that is just totally different from the pre-global financial crisis period, because there's essentially like an undersupply, right? So that undersupply needs to get sorted out before the interest rates are going to start to bite, even in that sector, which is typically the first you look at to see whether the monetary policy is starting to have an impact on the economy.
So this is a soup, Jens, and basically people are saying the Fed doesn't know, we don't know, so we're going to come up with our own projection and follow that, not necessarily what the Fed is saying. Which market do you buy? You saw pessimism from bonds, you saw pessimism from the dollar, you saw a surge in optimism in equities.
So I would say on Fed day or ECB day, it is very, very often that you have extremely erratic price action after the big news is out, partly because you have people on the sidelines that don't want to make a big bet into the event, and they make the bet that they would want to make otherwise once the uncertainty is out of the way. So I think there's been an element of that. especially considering that we've had this incredible period of volatility since the Russian invasion, right? That has really distorted everything, created like risk aversion, and therefore getting those events out of the way might have been the reason we had the volatility, as opposed to any specific read on the news that came out on the day.
Yeah, and Lisa mentioned the weaker dollar. Have we already seen the peak of dollar strength now that the hiking cycle has started, or is this cycle different?
Yeah, so if you analyze hiking cycles historically, you will find that typically in the run-up to the first hike, like the sort of 6 months into the hike, was typically the period in which the dollar did the best. So that's the historical experience. The question is whether that historical experience really applies to this cycle. And it really comes down to kind of like, what is the terminal rate? Like, how much can this economy really take? Is it a 1% peak in rate, 2%, 3%, or something different, right? And I do think we are an economy that is just totally different from the last cycle, at least. And therefore, the notion that we cannot get rates above 2 and we'll have a recession before that is probably too pessimistic. I think the Fed is going to be going aggressively at the next several meetings. And certainly for dollar-yen, where rates are totally stuck in Japan still, I think the upward pressure that you've seen in recent weeks can be sustained.
Jens, let's finish on this. The Federal Reserve Chair is confident that this economy is strong. It can withstand a tightening cycle. It can even flourish. Jens, should that worry me or give me confidence?
Well, I think one indicator that I like to look at is what is the nominal income growth in the U.S. economy. Nominal incomes, when you add up both the wage gains and the fact that there are job gains that are pretty significant, is around 10%. 10% year on year, and the momentum is still 10%, right? So we do have forward momentum in the economy, and we're coming from such a high level of growth. Growth is going to slow, but I tend to agree with Powell. This is not an economy that's going to go quickly into recession, and this economy will be able to take some rate hikes before it starts to bite.
Jens Nordvik, thank you, sir, of Exante Data. Lisa, I have to say, Jens' view is a rare view, almost contrarian, because the consensus view that I get whenever we talk about this tightening cycle of the Fed, can they get to 280 by year-end 2023? People shrug their shoulders and say, unlikely. I doubt it.
I love how your question is basically, are they delusional or brilliant, right? And at this point, a lot of people are saying, they're fooling themselves when it comes to what they can achieve. But you do have the likes of Bill Dudley and others coming out and saying, look, you're seeing inflation that we have not seen in decades. To make any kind of extrapolation from what we've seen over the past decade and the low inflation and the reversion to that going forward is hard to do based on some of the dynamics that we see persisting for way longer than we expected.
Well, I guess the way I'm phrasing the question, the Fed chair's never going to say the economy's terrible, but we're going to hike anyway. 1. 2, if he's saying it's really strong and can withstand a tightening cycle, do you take confidence in the belief that the chairman thinks the economy is strong, or does it concern you that he's going to get more aggressive in the coming months? I mean, Lisa, not to respond to the balance sheet story either. I thought it was interesting there were hardly any questions yesterday in the news conference.
Honestly,
on the balance sheet.
My favorite part, read the minutes. You'll get lots of information in the minutes.
This whole story reminds me of December.
Yeah.
He said everything. Everyone bought risk. They waited for the minutes and said, wow, they're going to do this?
I know, seriously.
And he told you in the news conference. Anyway, from New York, with futures lower, this is Bloomberg.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Two things dominating this market. One, the talks between Russia and Ukraine, the action on the ground, and two, the Federal Reserve. Let's start with one. The Kremlin out this morning, pretty early, and saying basically the following. Talks of major progress, reports of major progress in talks. Wrong. One word, wrong. Futures slipped back off the back of that, down about 0.4% on the S&P. Broadly across Europe in negative territory. On the Nasdaq, we're down about 0.5%. Subtle, mild moves after a 2-day gain on the S&P 500, close to 4.4%, the biggest 2-day pop going back to April 2020. This equity market didn't really respond to the Federal Reserve yesterday. This bond market did. 2s, 10s and 30s. Take a look. On 2s right now, 192. That's where we were on 10s a week ago. That's how quickly things have moved. On a 10-year, 211.72. And things are starting to get really, really bunched up when you look through the yield curve. Look at the yield curve now. 2s, 10s. 2s, 10s getting tighter, tighter, tighter. Lisa, you can throw in 3s, you can throw in 5s, you can throw in 7s. We're starting to see inversion. 2s, 10s down to 19 basis points, but through the belly of the curve and out to 10s, it's already there.
Basically saying that there's no way that the Fed can go at the pace that they are expecting to go without seriously dampening growth. My question is, how much are equities saying, well, it'll take 12 to 18 months for there to be a recession, so party's still on in the meantime?
I don't know. I just scratched my head yesterday repeatedly.
I did too.
I put out the question, I said, why are stocks up?
Yeah.
I'm not going to try and find a reason to say they're higher and this is because this happened. I saw some reports yesterday, it's because the chairman is confident about the outlook. He thinks the economy's strong, as if we should be buying stocks based on the forecast of the Federal Reserve given the last 12 months.
Ooh, I love the sarcasm. I wonder how you really feel about that. Honestly, though, I don't think that that's actually a credible reason for stocks to be up. I think probably some people pointing to overnight the moves in China as well and some of the support for markets, and perhaps that's a little bit more credible.
2.8% next year,
yeah.
1.9% year end. The dot plot is telling a different story.
Meanwhile, a lot of people are looking at central bankers. They're looking at the Federal Reserve, and today, in about an hour and a half, we're looking at the Bank of England and what their decision will be. And honestly, we were speaking with David Page earlier, and we were talking about what's the more important shift right now, what central bankers are thinking about, or what Vladimir Putin is thinking about. And David Page joins us right now. David Page, head of macro research at AXA Investment Managers. What would your response be to that? What are you more focused on?
Well, I think we're more focused in the very short term on the uncertainty of the Ukraine position. I mean, we've seen immense swings come through in fiscal and financial conditions and in terms of energy markets over the last couple of weeks. And we're in a phase at the moment where there's a degree of optimism. You know, we're obviously closely following the peace talks. It would be wonderful to think that there could be some peace soon. That might lead to some resolution in terms of some of the sanctions. But frankly, we just don't know. And when we see the concerns or when we see sort of the pushback that we're seeing on a military basis to the Russians, what we've seen in the past on this has always been escalation. Now, if we were to see some degree of escalation in Ukraine, it's not obvious what the NATO response would be, but I think it is obvious what the market response would be. If we see escalation come through, we'll see another significant risk-off, another tightening in financial conditions, and probably something that rattles through energy markets. So to take this sort of relatively benign, and I think we could say relatively benign week, rather than the malign week that we've seen in the weeks go by, and then to extrapolate that to the impact on the US economy, to the global economy, looks like what the Fed's done. So to our minds, if we get this benign outcome that seems to be sort of settling in markets at the moment, then maybe the Fed could achieve what they're looking at with relatively minimal slowdown. But if we see escalation come through, you're going to get tightening in financial conditions, you're going to get a slowdown in growth, global and the US, and that's going to take some of the steam out of what the Fed itself needs to do. So I think that's the big uncertainty for us at the moment, rather than the internal dynamics of where the neutral rate is and how much the Fed needs to do to tighten inflation.
David, how much more uncertain is it for the Federal Reserve than, say, the Bank of England, which is so much more directly affected in some capacities by the conflict and the ramifications?
I think that's absolutely right. I mean, the epicenter of this is Europe, and the key channel is not really proximity, it's the energy markets and the direct exposure that you have to that. So we think of the Eurozone, but the UK is on the same gas hub as the Eurozone. So the transmission through gas prices is serious. Now, the Bank of England had fleshed this out to some extent in February in the monetary policy report that we saw in February. The bank very clearly said, well, if we raise rates to 1.5% by the middle of next year, which was what markets were considering at the time, then we think unemployment in the UK is going to rise from 4% to 5% by the end of the forecast horizon. So that's quite a meaningful push-up coming through, and that would really start to draw down on some of the endogenous, the domestically driven inflation that we're seeing come through. Since then, things have got worse. The markets are pricing in tighter policy because of the boost to inflation they see coming through from energy markets, and energy markets are giving a bigger terms of trade hit to the UK. So were the bank to be publishing forecasts again based on today's numbers, we would expect to see a bigger increase come through in unemployment. And that's very clearly, that juggle is what all central banks are thinking about. Inflation is going to spike in the near term. Inflation expectations are a concern and they need to be contained, but there is an impact that's likely to come through in unemployment. When the bank meets today, it's not going to publish forecasts. It will just publish a decision. So it's relatively easy to talk about the outlook qualitatively. But it's the same decision for the UK as the Fed's debating as well.
Obviously, a 25 basis point move is expected from the BOE today, but the market sees a probability of a 50 basis point move coming in June. Chair Powell yesterday in his press conference also seemed to leave the door open potentially to a 50 basis point move at some point this year, saying that they will adjust and be more aggressive if necessary. Do you think that will be necessary?
From our perspective, from the Fed's point of view, no, we don't think so at this stage. Indeed, if we're right and there is more priced in markets over the coming weeks and months in terms of an escalation from a Ukraine situation, then arguably the Fed might need to do a little bit less by the end of the year. But very clearly, the dot plot is suggesting that the Fed starts off at a pretty neat clip. But clearly the Fed is uncertain. They've talked about being humble and nimble, and if we do see sort of a pickup come through, then it's left the door open for that. From the Bank of England's perspective, I think that's very unlikely. I think there is evidence that the gradualists are starting to pick up there. I wouldn't be surprised if today we see at least one vote for an unchanged to give the Bank of England time to consider projections in the May meeting. We personally think you'll see 3 consecutive hikes of 25 basis points through till June, and then we think it'll pause. So that in itself is much less than market's price for the BOE.
To bring it back to the Fed, the note from Steve Englander over Standard Charter called this dating without commitment from the Fed. Basically, the idea that it's giving credence to the market pricing, that it will be more aggressive, allowing that to take shape so that all the hawkishness potentially becomes priced in, giving them room to end up being more dovish if they need to be. So when they say they are going to make it to 1.9% by year end, why might not they be able to do that? Do you think that they will do that?
On balance, we think they'll be just short of that. So why would they not be able to do it, I think, is as we've said. What the Fed need to achieve is a tightening in financial conditions to somewhat slow growth and to somewhat take the pressure out of the labour market. And that was made very clear. Now, in a benign situation, the Fed needs to do the running here, and the Fed needs to raise monetary policy to achieve that outcome. In a less benign situation, we could see escalation in the geopolitical concerns. That would tighten financial conditions. That will slow growth. And then the Fed doesn't need to move as much. Now, on balance, our call is that you probably do see a little bit of that coming through by year end. And it's probably even more obvious as we go through the 2023 forecast, where they're seeing another 4 hikes come through. But, Chair Powell said a number of times, the dot plot is not a plan. It's not a projection. It is a projection. It's not a forecast of exactly what they're going to do. The Fed doesn't know what it's going to do over the next 3 years any more than any of us do in markets. But I think what we take from the dot plot is the fact that they know now they need to keep moving relatively quickly, because for now, for the next few months, maintaining inflation expectations at anchored levels around their inflation target is paramount. And I think that's what they see as the key risk over the next few months. So for now, we get back-to-back moves, and I think anything that sort of surprises materially to the upside in their inflation outlook could deliver a faster increase coming through from the Fed, but that's not our base case.
David Page, thank you, of AXA. Brilliant to catch up, as always. The language has changed too, Kaylee. They're talking about tightening now. Before they were talking about a removal of accommodation. Now they're talking about tightening.
Yeah, the language definitely matters here. First, they abandoned transitory, and now they are saying, yes, we are going to move toward tightening. And you mentioned the point earlier about the lack of conversation around quantitative tightening, specifically in the press conference. Not a lot of questions when it comes to the balance sheet, and that factors into the equation as well. It's not just about the dot plot and the rate hike mechanism. It's those two things happening in tandem whenever that begins.
Well, Lisa, we touched on this. Chairman Powell was thrilled just to get a question on it. Then he said, thank you for the question. He seemed happy for once in that news conference.
Yeah, he didn't seem very happy for the rest of it, and he seemed like he was eager to get off the stage, which I don't blame him for. But this balance sheet question, clearly they had focused on this extensively. I did think it was interesting that he punted to the meeting minutes, though, and it does raise a question of how much markets could react to those minutes down the line when they get details and they're faced with the possibility of real balance sheet shrinkage. Do we have any sense of what the effect on markets would be? He said what? 1 rate hike, that's what the equivalent is?
Yeah, but how much of balance sheet shrinkage equals 1 rate hike? No one asked, did they?
No.
It kind of bothered me through the whole news conference. Anyway, I'll save my rant for another time. Typically what happens is you get a Federal Reserve that comes out with a plan to tighten financial conditions, to raise interest rates, and the market front loads it, and they have to back away. That's typically what happens. But this time, Lisa, as you know, so many things about this tightening cycle are different. They're trying to do things a whole lot more quickly. They think the economy is stronger than it was when they started a tightening cycle back in 2015. The fact that inflation is where it is versus where it was is a major factor too.
They basically admitted we got inflation wrong, right? I mean, they basically come out and said they thought that some of the base comparisons would be different than what they are now, and they expect inflation to be high for a lot longer throughout the year.
You know what was really strange? That he said it wasn't the new framework. Even if we had the old framework, policy wouldn't make a difference. What did you make of that? I thought that was bizarre.
Oh, I think a lot of people had a lot of comments on Twitter, and I think I'll leave it there.
Futures down a third, very diplomatically, so thank you.
Anytime.
Tom Keen's away.
Exactly. I don't
have an opinion, but he would have shared it. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The Kremlin says the reports of major progress in peace talks with Ukraine are wrong. That comes a day after Russia said a proposal for Ukraine to become a neutral country with its own armed forces could be seen as a compromise. Today, a Kremlin spokesman said that Ukrainian negotiators are in no rush. The expanded arsenal that the U.S. is sending to Ukraine includes 100 armed drones. Bloomberg's learned that the drones are tube-launched from the ground and plunge into their targets. It's called the Switchblade. It is made by Aerovironment. President Biden has also promised thousands of anti-aircraft and anti-tank missiles. Authorities in Japan say that an earthquake killed at least 4 people and injured dozens more. The quake was a magnitude of 7.4. It struck near Fukushima, roughly the same area that was devastated by an earthquake and tsunami 11 years ago. Republican officials in Texas are unhappy over a new Citigroup policy on abortion. The bank will now cover Travel costs for employees seeking an abortion after several states, including Texas, implemented or proposed a near-total ban on the procedure. Land Commissioner George P. Bush, who's running for the Republican nomination for Attorney General, called it a PR stunt by a woke company. And Robinhood Markets plans to let users loan out their stocks to other financial institutions. It's part of a push to compete with more conventional brokerages such as Fidelity and E-Trade. Robinhood is, of course, best known for commission-free stock and cryptocurrency trading, and it's gradually becoming more of a full-service platform. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
very good feel that some of our financial institutions are losing patience about this sort of isolated status of Hong Kong. And Hong Kong is an international financial center. And nobody attaches as much importance as myself to Hong Kong's international status.
Carrie Lam there, the Hong Kong chief executive from New York City this morning. Good morning. Futures bouncing off the lows. We're down just 1/3% on the S&P 500. Yields come in 6 basis points. Bit of curve inversion out there through the belly and into 10s. We'll talk about that later. Your 10-year yield 212.25. Crude 99.41, up by 4.6%. The latest on Russia, Ukraine. Let's start here. Yesterday there was a story from the Financial Times. It read as follows. Ukraine and Russia have made significant progress on a tentative 15-point peace plan. The response from Ukraine, they dismissed the report, saying significant issues remained. The response from the Kremlin this morning, this is Russia's stance, the spokesman, Dmitry Peskov, saying that Financial Times report, Lisa, of substantial progress in talks with Ukraine was wrong, and talks will continue today. He blamed Kyiv for dragging its feet on negotiations.
What do we trust, right? I mean, how can we trust this? Who can we trust? And the fact that markets respond so violently, frankly, to almost every headline raises questions about the uncertainty and the degree of uncertainty out there. And frankly, the uncertainty seems to be what's been underpinning all of the notes that we get from analysts, not only from the fact that we're seeing this crisis in Ukraine, but that we're still in a pandemic, a COVID pandemic, which is raising questions about the, frankly, public health ramifications of this conflict. And joining us to bring the crises together in the sort of pinnacle, frankly, of pain that we're seeing in Ukraine, Dr. Chris Beyer, professor and epidemiologist at the Johns Hopkins Bloomberg School of Public Health. Dr. Beyer, let's start there. This question of how much we're seeing the dueling crises come together. What is the potential ramification from a public health standpoint of the exodus that we're seeing in Ukraine and, frankly, the invasion at this moment?
Well, Lisa, it's always the case that when you have conflict and population displacement and movement, there is a heightened risk of many kinds of health threats, but certainly infectious diseases. The last thing you would ever want to do is launch an invasion of another country during a pandemic. Russia did that. They, of course, are targeting civilian targets as part of their campaign. And what that means is driving millions of people, both internally displaced and displacing to other countries. So 2.5 million or so Ukrainians have left the country already. We have to remember that half of those are children. So many of those children, of course, are too young to be immunized. Ukraine had a sputtering and stalling COVID vaccination effort, perhaps about 35% of adults immunized, but with a mix of vaccines, including low efficacy vaccines. So this was a very vulnerable population, and they are moving into countries that also had low coverage: Moldova, Romania, Poland. And many of these countries have high vaccine hesitancy, higher than the States, because of mistrust from the old Soviet system and mistrust of the Russian and Chinese products.
So, Dr. Beyer, play this out. What are we talking about here? We all have deep feelings of empathy for these pictures that we see, for those children that you talk about who are now homeless and trying to find a new place to be safe. What are the longer-term ramifications from this exodus?
Well, we're very concerned about several. One, of course, is the COVID transmission acquisition and these low vaccine coverages. Ukraine also was undergoing a public health emergency in December and January and up to the invasion of polio. There were a number of cases, and they were attempting to immunize about 140,000 children against polio when Russia invaded. So that polio campaign has been suspended. And in these kind of crowded conditions, poor hygiene, not enough fresh water, people crowded into train stations and buses and shelters, that is, of course, a terrible setting for polio. Ukraine also had a serious epidemic, the second most serious epidemic of HIV in the region. Russia has the most severe epidemic of HIV and TB. And again, TB and multi-drug resistant TB can spread in these kinds of settings of crowding mass population movement. So all of those taken together really suggest that there will be lasting vulnerabilities, whatever happens with the conflict. And I don't have to tell you that the mental health toll of the shelling and the bombing and the
the fleeing is just enormous for children and for their parents. And of course, this is splitting up families because men over 60 are not allowed to leave.
Well, Dr. Byra, the other factor to consider here is this is war. There are facilities that are being attacked. We have seen the pictures of attacks on hospitals. When it comes to healthcare infrastructure, how difficult is it to get those kind of facilities back up and running, even if the conflict ends?
This is one of the most horrific aspects of Russia's strategy, and it should be said that it's often seen as something like collateral damage. That's not what we're seeing. This is the deliberate targeting of healthcare facilities, healthcare workers, and patients as part of the terror campaign, is trying to undermine the Ukrainian resistance. This is Putin's playbook also in Syria. In Syria, the Russians bombed more than 500 healthcare facilities. What we know right now is that the Russians have bombed at least 31. Those are confirmed by the WHO. The Ukrainian estimate is closer to 60, and that, of course, includes maternity hospitals, as in Mariupol, cancer centers, blood transfusion centers, really just extraordinary. And the rebuilding of those and the recreation of the healthcare infrastructure will take years. You also lose, of course, a great deal of health professionals, many of whom may not come back or may not come back quickly. So this has devastating impacts on the long-term well-being of the population. And it should be understood, this is a war crime. For which Putin and his accomplices should be held accountable. There is a war crimes investigation underway at the International Criminal Court related to these attacks on healthcare because Ukraine is a member of the International Criminal Court, unlike Russia.
That is the language the President of the United States used just yesterday. Doctor, this was a valuable conversation. Thank you. Dr. Chris Byra there of the Johns Hopkins Bloomberg School of Public Health. That's on healthcare. We need to talk about food security as well. Earlier on this morning, in the last hour, we heard from the Agricultural Minister for Ukraine, and they said the following, Lisa. The situation with Ukraine's food is under control. Wheat stockpiles sufficient for 2 years. Corn stockpiles sufficient for 1.5 years. What we heard in the last hour or so.
That is the food security for Ukraine. The question is, what is the food security also, not only for Ukraine, but for the rest of the world, in particularly countries that depend on that region so heavily for wheat imports, for other types of agricultural imports. And he also came out, was talking about maximizing milling wheat sowing, de-emphasizing sunflowers and trying to be flexible. It just speaks to the stress in one of the key aspects, the key areas, the breadbasket of Europe.
Katie, it's interesting gauging how markets are picking up on this story. Typically, when you have a big global shock, it's a global story for global markets, then a regional one, then a local one. Futures aren't really doing much off the back of these headlines from the Kremlin this morning. We're down just 1/3 of 1% now on the S&P.
It was an initial leg lower, which quickly recovered, John, and it begs the question, how much is the market discounting potentially an eventual end to the conflict? This equity market, frankly, is just a mystery to me, because why was it up yesterday? That's still a question that I don't think any of us have the answer to.
Or just looking through it now.
Yeah.
For the equity market stateside, at least, we'll stay on top of that. NASDAQ futures down 0.4 of 1%. From New York City, good morning to you all. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
There's just too much uncertainty and too many negative headlines for investors to stomach.
Certainly with the war in Ukraine, inflation is going to become even worse.
This is really a time where you have to be careful.
There's a stagflationary shock, but we think there's strong enough momentum that you're going to see growth around 3%.
The combination of tighter monetary policy, obviously the geopolitical piece, is slowing down growth.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Lisa Abramowitz and Katie Lyons, I'm Jonathan Ferro. Futures down about 0.25% on the S&P, 24 hours after a Fed decision. Lisa, some big goals for this central bank.
And basically a bond market that says we don't buy it, a bond market that is pricing in slower growth ahead and buying, frankly, that the Fed's not going to get to their target.
And a little bit of inversion from the belly of the curve out to tens. It's just starting to come through, isn't it?
Basically, the more the Fed tightens in the near term, the lower growth prospects in the longer term. That is the message being sent by a bond market that is very much sending a different signal, frankly, than equities, which we've been talking about all morning. And I will say, than the dollar, which also is reflecting a bit of pessimism in its decline.
Weaker off the back of that. We're going to go through all this for you. A bit of pushback to the Fed's forecast yesterday. In fact, a lot of pushback. Some pushback from Russia this morning as well, Katie, that we need to work through too. There was a report yesterday about progress in talks with Ukraine. Russia this morning just saying flat out one word, wrong.
Yeah, that report from the Financial Times that outlined a potential 15-point plan that would involve Ukrainian neutrality. At least that's what Russia wants. Ukraine saying in exchange for that, it would want its security guaranteed, which raises a lot of question marks. But the messaging has been, it feels different every day, depending on what source you are talking to, at what point, at what time of day. But we did hear a little bit of pushback as well from the Ukrainian side, saying that progress wasn't as substantial as maybe was indicated. And now it seems the Kremlin is coming back to match that idea.
And the talks continue today. Futures down about 0.25% on the S&P. I'll whip through things for you. Whip through them quickly. The Nasdaq 100 down about 1/3%. Into the bond market, Lisa's touched on it already. 10-year yields off the lows of the session, 212.61. Twos came very, very close to 2% yesterday. Right now, about 192. Yields there down about a couple of basis points too. And crude almost back at 100, Bremo. 99.31 on WTI, up 4.5%.
Let's sit on that oil move because we've seen a dramatic decline in oil prices this week. I think it's somewhere around 10%, even with the gains that we're seeing today, which raises a question to me. How much are we pricing in the conflict that we're seeing in Ukraine? The OECD today released their assessment of economic and policy impacts from the Ukrainian war. We're going to dig more into that. It's in about a half an hour time with Laurence Boone of the OECD, the chief economist there. My question is, they were talking about the potential decline in growth, the potential increase in inflation from the idea of market responses to the Ukraine conflict that persist. They are not persisting. They have reversed in many corners. Are markets too complacent to the idea that there could be a resolution for something that seems really increasingly entrenched if you listen to the rhetoric? And at 8 a.m., we get the Bank of England rate increase that we're expecting. It's expected to be the third consecutive meeting where they do increase rates. Two-year yields in the United Kingdom are pricing this in, but they are pulling back from some of the more hawkish projections in terms of what the Bank of England is going to have to do going forward because of the Ukrainian conflict and because of what that will do to growth. And at 8:30 a.m., we get a slew of data, the data dump in the United States, including building permits, housing starts, and also initial jobless claims. And this comes as Fed Chair Jay Powell talks about an extremely tight labor market. The unemployment rate falling to near the lows that we saw pre-pandemic. But still that participation rate still lagging behind. John, how much is that the focus? How much slack there is on the sidelines waiting to get back in as the pandemic clears and as people need to actually refill their savings accounts?
Lisa, they seem to think that unemployment can hit 3.5% and stay there through 2023, even with a big tightening cycle in a very short amount of time. This is not 2015 to 2018. This is a different effort this time around.
And frankly, it's a labor market that we don't fully understand. We don't know where everybody went. There are some explanations. We don't know how quickly people can come back. So that reaction function in terms of wages, not fully understood. The Fed stance is it can withstand what we're about to do.
Do we not listen to Jim Bullard anymore, Kaylee? 50 basis point hike he voted for yesterday at the St. Louis Fed. Hardly got any play. We're looking ahead to the Bank of England this morning. Remember Catherine Mann, formerly of Citi in the OECD, she put her hand up for a 50 basis point hike last time around too.
Yeah, well, while Jim Bullard was the only actual dissenter in yesterday's meeting, even Powell himself seemed to leave the door open to a 50 basis point hike at some point. He didn't take that entirely off the table in his commentary in the press conference, and I wonder what commentary we will get about that from the BOE in just about an hour's time, John. Yeah, they're not expected to move 50 today, but could they do it in June? Some in the market expecting that.
Every meeting, Lisa, is a live meeting. The next one in early May is going to be interesting too.
Yeah, honestly, how do they even position themselves? I mean, Bank of England kind of has a pass because they're not going to have a press conference. They're not going to be subjected to the grilling that Fed Chair Jay Powell was. But still, I mean, such a tricky time. I do feel for them. I know you're a little bit less forgiving than I am right now.
I mean, they wanted to be on the central bank. They've got a seat on the central bank. Congratulations. Tough job, sure. I get it. You're going to feel sorry for Chairman Powell when he does the speech tour after he leaves the Federal Reserve.
Really?
You start to see the numbers that he gets on those checks for those speeches.
This is your version of Tom
I don't feel
Keynes.
sorry for them.
I don't have an opinion, but
I mean, I have an opinion. You do a tour on the Federal Reserve and you can get $500,000 to do a speech afterwards. You pity them?
Must be nice.
I'm not pitting them on a personal level. I am pitying the idea of having to make a decision at a time where things are so uncertain. It is a difficult period, a treacherous one, especially with the overlay of the Ukrainian war.
That I agree with. Our team coverage starts right now with Bloomberg's Jack Fitzpatrick in Washington, Maria Tadeo in Brussels. Maria, have we made any progress? Ukraine saying, not really. And the reports that indicate that we have, Russia says, that's wrong.
Yeah, and Jonathan, if you look also at the major developments that we've had over the past 24 hours, nothing has really changed on the ground either. We know that yesterday, Mariupol, this is a city that connects Crimea, that is now, of course, territory of the Russian Federation, which Ukraine disputes and is connected to the Donbass. For the Russians, is key to get control of the city. It was shelled again yesterday. The invasion continues. We've seen the bombings continue pretty much on an everyday basis. The ceasefire, which Ukraine says is the #1 condition before talks begin is really not happening. So I would say, have we made any progress? No. Are we going to make any progress in the next 24 hours? The key is the ceasefire here. For the Ukrainians, have made it very clear we can talk about many things, but for as long as Russia continues to bomb our cities, there's nothing we can do about it. And we're not going to engage in anything that could look like neutral status if it means that we continue to get bombed on a daily basis.
Who's winning? And I say this realizing that no one is winning right now. But if we take a look at the conflict, some people are saying Russia is losing. Is that accurate?
It is in many ways, and that's pretty obvious to see. This was an invasion that is now going on into day 22. It is costing a lot of money for the Russian Federation. The Russian Federation, Vladimir Putin, has essentially, and I never use this language, but he's essentially wrecked this country's economy over the past 2 weeks, and they haven't taken the main goals. Remember, Lisa, they said it very clearly. They wanted to take the Ukrainian capital, Kyiv, that is still in the control of the Ukrainian government. They're still fighting for Mariupol, and this is terrible for civilians, but this is still very much a military target they've not been able to accomplish. And a lot of the spaces and the places in which they've made big advances are all in eastern Ukraine. But when you look at the West, this is still under the government of President Zelensky. So this military operation that Vladimir Putin would be, or promised it would be covered in glory and they could do in 3 to 4 days, is clearly now turning into something that is, A, very messy, but also very expensive for the Russian Federation.
Well, speaking of expenses, Jack, obviously the Biden administration taking further action to aid Ukraine in the fighting, providing weapons, providing armed drones, not yet jets. It remains a question of whether or not that will happen. But in terms of the role the U.S. could play in potentially a peace agreement down the line, how large of a role will it have to have in guaranteeing Ukraine's security?
That's something that there's a lot of bipartisan support in Congress for in terms of continuing to send defense aid. I think a lot of lawmakers seem to believe that underpins Ukraine's standing, obviously, in any talks with Russia. The question now is how quickly can they move on the funds that Congress has provided. You saw a total of $1 billion over the course of a week, and what will be needed next. There are conversations happening in Congress about the seemingly obvious need for another bill at some point over maybe the next few weeks. The question is, do they get there in terms of sending planes to Ukraine? How much of it is smaller things like body armor, and how much of it is more ideally a rebuilding of Ukraine and other humanitarian needs rather than defense needs? So there's interest in Congress in continuing to provide further aid, and over the next few weeks, there's a conversation developing that is bipartisan on exactly what's needed.
Hey, Jack, thank you. Jack Fitzpatrick there, and Maria Tadeo out of DC and Brussels, respectively. Just getting some headlines from China. They remind me of the headlines that we used to get from the United States maybe 12 months ago. At least they read as follows. The China Politburo urging to increase the vaccination rate, vows to further raise the vaccination rate, to expand COVID testing coverage of key groups. They go on to say, and this one's going to be interesting, Lisa, this one I think open to interpretation what they mean by this, vowing more effective measures on COVID control. What do you think they mean by that? Studying virus control measures. Are they studying a shift away from what they have been doing for the last 2 years?
Or are they studying what it would mean to actually do a full lockdown the way that other places in the mainland are doing? Because right now, their facilities are completely overwhelmed. They haven't been able to keep up with what they would need to do to quarantine people in the mass kind of way that they're doing over in mainland China. How much is this a nod to Xi Jinping, and how much is this a nod to the businesses that are leaving for Singapore in mass?
Part of the Fed's outlook 12 months ago, looking forward 12 months, Kayleigh, is that some of these issues would be resolved. And therefore, off the back of that, some of the supply chain issues would be resolved as well. In China, are we anywhere near to resolving those things?
Well, there actually was an interesting story out on the Bloomberg today that, yes, it's still sticking with COVID zero policy, but it is finding a way to keep factories running via closed loops. So you essentially keep the workers cut off from the outside world, but they can continue to do their jobs. It's what we're seeing in Shenzhen with Foxconn's iPhone assembly group. So maybe that is the model going forward that China is looking about, that CCTV is talking about.
That's the good news. Futures down 0.2% on the S&P. The Federal Reserve was yesterday. The Bank of England is this morning. That decision about 50 minutes away. We'll catch up with Sarah Hewen of Standard Chartered Bank on that. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The Bank of England is almost certain to reach another milestone today. It's expected to take interest rates back to their pre-COVID level. Policymakers are likely to increase their benchmark a quarter point to 0.75%. They're responding to a worsening inflation outlook. The Kremlin says that reports of major progress in peace talks with Ukraine are wrong. That comes a day after Russia said a proposal for Ukraine to become a neutral country with its own armed forces could be seen as a compromise. Today, a Kremlin spokesman said that Ukrainian negotiators are in no rush. And the House is preparing to revoke Russia's free trade status with the U.S. That would enable the U.S. to impose higher tariffs on Russian goods. If the House action becomes law, Russia would be put in the same category as countries such as North Korea and Cuba. In China, the latest COVID outbreak appears to be easing. Authorities reported the lowest number of cases so far this week. And in the epicenter of the latest outbreak, Jilin, infections have dropped from recent highs since the province was locked down on Monday. More chaos in the London nickel market. Brokers trying to sell at the 8% daily price limit had their orders cancelled. That prompted the London Metal Exchange to delay the opening of electronic trading. It's a further setback to the LME's attempts to restore order following a week-long suspension. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Big things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focused on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
The FOMC raised its policy interest rate by 1/4 percentage point. The economy is very strong, and against the backdrop of an extremely tight labor market and high inflation, the committee anticipates that ongoing increases in the target range for the federal funds rate will be appropriate.
Chairman Powell, the first interest rate hike since 2018, and going back a couple of years, Lisa, did you think we'd get it this soon?
No.
When this pandemic started?
No, and I think that they didn't think so either, and I think that they really indicated they were surprised. He also seemed to indicate that the labor market was dangerously tight. What did you make of that? That's pretty strong language for a Fed that has had such a strong employment mandate.
I found that news conference fascinating, and if I was that chairman and came out and looked at my Bloomberg anywhere and checked the equity market, I think I'd be surprised to see how deep into the green it was based on some of the things he said yesterday on what they've got to do for the next 2 years. Futures coming a couple of tenths of 1% on the S&P this morning. Good morning to you all. Yields coming in 5 basis points to 213.14 on 10s. Crude just short of 100 at 99.59, up 4.8%. If you're wondering what happened to those $2 bonds, the interest payments on them that Russia needed to pay yesterday, the total was about 117 million. Russia's finance ministry today saying the payment has been made to its foreign correspondent bank. They go on to say this. Kaylee, the ministry said it will comment separately later on whether the payment had been credited to Citibank in London. That's the payment agent for Russia's Eurobonds. So we still haven't cleaned this one up.
Yeah, there's a lot of information we still don't have, including in what currency that payment was made. Because if it was made in rubles, technically the rating agencies have said, yes, that still constitutes a default if this payment isn't made in dollars. But this one, of course, is very unusual because it's not that Russia doesn't have the money. It's the ability to use it that's in question.
Jean Bavin joins us now, the head of the BlackRock Investment Institute. Jean, I'll keep you out of trouble. We won't talk about Russian debt. We'll talk about the Fed yesterday. Guest after guest, with the exception of Jens Nordvig of Exante Data, have essentially told all of us their plan, implied by that dot plot, if indeed you call that a plan, is unachievable. Do you agree?
Yeah, I think it's unrealistically hawkish what they've put out yesterday. The tone, certainly. I think it's useful to remember. I mean, like in September last year, 50% of the committee thought there would be no hike in 2022. Now we're talking about 7 in total, and another more coming. They are planning to go to 2.8 above their long-run neutral. That is again unrealistically hawkish in our view, and I don't think they believe it, to be honest, because their forecast itself doesn't show what that should do if they were to deliver that.
Do you think it's unrealistically hawkish if the Ukraine conflict were to get resolved in short order?
Even in that case, I think the this kind of environment that is shaped by like powerful supply factors. We've talked about this a few times when you had me on the show here. Is independent of the Ukraine situation. I think the Ukraine situation adds to this. It's another layer that makes it even more tricky to slam the brakes on this economy. But even without the Ukraine or the Ukraine situation being resolved swiftly, which I think the market is kind of like starting to assume. I think it's still very hard to deliver that. And to make the point clear about their forecast, the unemployment rate that is supposedly unhealthy, extremely tight, you used the words, Lisa, a moment ago from Chairman Powell, they have it go from 3.5 now to 3.6 in 2024. So if it's unhealthy now, it's going to be unhealthy still in 2024. That doesn't sound like addressing the issue if they think it's unhealthy.
Fair point. There's a large question around that unemployment forecast staying so stagnant over the next 2 years. Jean, is what we learned from the Fed yesterday that inflation is going to take precedence over anything else, including over growth? And I'm wondering if that's a global story in your view when we think about the BOE, when we think about the ECB, and what that as a result means for the necessity of fiscal policy.
So I think at this juncture, it's a lot easier to talk about inflation, and I think the temptation to look strong on inflation is dominating everything else. Which is why I think we need to distinguish between what they want to say now about the future versus what they will actually do. In reality, as I think time goes by and we see the consequences of a few hikes, the growth aspect will become more real, and I think the tone will change. So, but at this stage, I mean, it's easy to talk is cheap. Talking about inflation, you know, you can move dots around. It's not very costly yet. And so I think that's the reason why central banks are tempted to emphasize the inflation side of things at this juncture. I do agree with your point, though, that I think in 2020 we've entered a policy revolution, which is about a more explicit coordination between fiscal and monetary policy. I think it's about fiscal taking the lead. And central banks are in a bind there. They will talk around it, but the real move, I think, will be coming from fiscal policy, if any, going forward. That's true in Europe. And I think if we needed more in the U.S., I think this is also where I would expect it to come.
Well, let's talk about the U.S. equity market, Jean. I think for a lot of people, they're nervous about being in this market right now. You've got a yield curve that's slowly inverting, consumer confidence in America, decade lows. You've got another energy shock on top of that, and growth expectations are being cut. They're not being raised. Have we seen enough of a price correction year to date so far to make you want to say the stocks are the place to be for the rest of this year?
Well, I think, you know, bonds is not the place you want to be. So I will start by making that observation, because then that leads you to the where do you want to be elsewhere. This environment where, I mean, you know, risk of hawkish stocks, as we see now, is real. We see inflation, you know, will continue to be a story. We're going to live with inflation. And bonds are not playing the ballast role that they've been playing in portfolios. That has been reduced quite a bit. So as a result, you need to think about like where you want to allocate. And, you know, we think DM equities will provide more resilience in the face of disinflation that we're going to see. Ukraine has been a concern that has been playing into the equity market. I don't think that can be a drag for months. At some point, despite the human tragedy, which is a real big issue, I think at some point that's going to take a turn, and markets will start to focus on other factors. So yes, I think DM equities are on a 6 to 12 month basis. We are overweight, and we think that's an attractive place to be.
Jean Bavin of BlackRock. Thank you, Jean. Tough year ahead, for sure. Futures down 1/3 of 1%, but bottom line for the team at BlackRock, Lisa, they're sticking with it.
Honestly, at this point, given the fact that people are still buying iPhones, they're still going out and making purchases at Walmart and on Amazon, why not go for those cash flows, especially given the fact that they have more inflation resilience than, say, bonds that are getting hammered?
Katie Lines, did you hear that? Was Bramo bullish just then? Was that what that was?
I'm realistic.
Sound not bullish.
I'm sorry. What was that?
That was a realistic assessment of what's going on.
Tom's not here, and you...
I'm not always negative.
Okay,
it's just,
okay.
you know, I mean, honestly.
Just clarifying.
It's just that, you know, what else are you going to go to? I'm sympathetic to it.
I was surprised by it. Pity for the Fed. Long certain stocks. What is this?
We'll discuss in the...